Окей. Доброго ранку, шановні колеги. Это Kamola из Лондона. Мы начинаем нашу конференцию. Я просто хочу быстро объяснить, что у нас есть сегодня перевод. Если можно поставить на мьют ваши микрофоны. Да, если вы пойдете вниз вашего экрана и увидите глобус, это перевод, вы можете выбрать другой канал, и у нас есть второй канал с переводом. Сегодня утром мы открываем двухдневный семинар, посвященный развитию факторинга в Украине. And I'll switch now to English. So our day will go as follows. Today we will discuss the roadmap, how we're going to build the factoring and receivable finance in Ukraine next year. And tomorrow we will have a special focus group already with the Ukrainian local professionals working on actually developing and discussing the next steps on our journey to building great road to receivable finance for our small and medium-sized enterprises. So I think by now everybody quite familiar, but for those that don't know me, my name is Kamola. I am part of the EBRD's London trade finance team. I've been working in Ukraine for more than 16 years and last 10 years focusing on trade finance together with the Ukrainian banks. And this morning, it is my great pleasure to introduce to you my colleague in Kiev office, who is deputy head of the Kiev, Alexander Pavlov. I asked Alexander to share with us about EBRD's work in Ukraine, what we have done, especially this year, considering the crisis response, and what are our plans for the next year, so that you could all picture yourself where we fit in within the EBRD's work. So please welcome my colleague Alexander.
Good morning. Can you hear me?
Yes, we can, and yes, we can see you.
Okay, perfect. So good morning, everyone. It's a great pleasure to be again with this crowd, looking after the very important topic of developing different means of financing in Ukraine. In this particular case, factoring. It is clear that EBRD sees its role not only as the financier and investor in the countries of operations, but also as the supporter of the infrastructure development and product development, market development. And that's why these sorts of activities that Kamola and our trade finance team in London are heading in Ukraine are extremely important for us, and we value it very much. The entire business of trade finance for EBRD is actually a precious asset. It's probably, I believe this program has been recognized many times as the best trade finance, IFI trade finance program internationally. And with the addition of the factoring in Ukraine, I think we're gonna reach new heights. So what are we talking about when we look at EBRD in Ukraine? Clearly, we are one of the major international financial institutions in Europe, in the developing Europe, and in Ukraine in particular. We have been and we continue to be the #1 investor in terms of amounts in Ukraine, international investor, financial investor. The current portfolio of EBRD in Ukraine is about 4.2 billion euros, and it is spread across all different sectors of the economy, roughly 1/3 in infrastructure sector, 1/3 in various industries such as agriculture and so on and so forth, and about a quarter to a third is with the financial sector, with the banks. So the activities of the bank in Ukraine, surprisingly, are not, the volumes of business that we do is not so much volatile. We have been consistently working in the range of between 800 million and 1 billion euros per year of investment over the past 3 years. We still aim and hope to reach this target even this year, despite all the crisis events. Which means that we are very much an institution that is helpful both in crisis and not so crisis times. and we're always able to find, the right products and the right means, to satisfy the client's needs and the country's needs. Ukraine is not a big exception from the bank's performance this year overall. The corona crisis obviously has changed our ways of working substantially, but it only worked for the better for EBRD. Looking at the numbers, we are way ahead of the full year numbers already as of last year, which means that this year we're going to have a record volume of investments across our countries of operation. This is due to the fact that immediately after the lockdowns started to be introduced in March, April this year, the EBRD's board of directors took a decision to offer and to propose a package of anti-crisis, anti-COVID, whatever you can call it, measures, which we called a resilience framework, under which we started providing the financing on adjusted terms, let's put it this way, to our clients across the world. Same in Ukraine, but I think next time we're going to have a conference, I will tell you what the actual results for the year were and how the regional distribution of our investment looks like, because I think it's going to be quite interesting to see that it's changed from last year, and already now we can see that we're doing more in the Mediterranean region, basically speaking, the North African countries. Greece is performing very well this year, and such countries as Turkey, Morocco, Egypt, which were slightly less represented in the previous year. So we're able to adjust. We're able to address specific market needs. And as far as Ukraine is concerned, going back to this country, we're seeing quite significant increase in demand for infrastructure financing. And you probably have already noticed our recent transaction with Ukrposhta, for example, which is obviously an important element of the infrastructure in the country. And other projects are to come. On average, we do about 50 transactions per year in Ukraine, as I said, to the tune of 1 billion euros. About 3/4 of this business goes to private sector. So we do, of course, invest in sovereign projects, especially like big infrastructure projects. They often require some form of sovereign guarantee. But the largest share in terms of number of projects, but also in terms of amounts, is usually dedicated to the private sector. And trade finance business is not a small part of it. I would leave it to Kamola to comment if she wants, but the turnovers on the trade finance lines that we have throughout the year ranges probably between 250 to 400 million euros, maybe even more. I might not have the most recent figures. So that's where we are in terms of investment. Our investment goes very much hand in hand with various types of policy dialogue and technical assistance initiatives, as I mentioned from the start. And we consider it extremely important that we do not only invest money and support, the liquidity and various types of risk-taking activities in the country, but also that we provide the necessary technical assistance. We bring the right experts, we bring the best international expertise to the market, and also we try to change the legal environment and regulatory environment. That's why we're working very closely with the various regulators, obviously with the National Bank of Ukraine, but also with the other stakeholders such as the Ministry of Finance, the Securities Commission, and other entities. So that's a big part of our activities, both in the financial sector and also in other sectors. I think it is worth mentioning here our efforts to basically improve the corporate governance in the country, the corporate governance of state-owned enterprises, of state-owned banks. It's not a secret that more than half of assets in the banking system of Ukraine is with state-owned banks. So we believe it's extremely important to put the right discipline there. And have these banks operate on a fully commercial and level playing field levels. So we can talk for hours about EBRD. Obviously, it's a much bigger area than just a small area of factoring. But frankly, we see a huge potential, for factoring to develop in the country. Also, we are going to be ready to support it financially, and we look for investing and supporting, financial institutions, our partners, with very significant amounts of money once the market is there, once the demand is generated. We're going to be there to support you. Thank you very much, and have productive discussions. We look very much forward to flourishing market in the coming years. Thank you.
Alexander, thank you so much. Thank you for your brief update. It's always interesting for us also to see how we fit in within the business and work of Team Ukraine. And yes, 1 billion a year is an impressive, and it's a sign of stability always for the Ukrainian market. Personally, I like one podcast. It's called How I Build It. It's an NPR podcast, and every time, every episode starts with the problem that the founder of some companies find, and then try to solve this problem. And what is interesting here, the problem that we're trying to solve here even starts with our own seminar. So first of all, we had the problem to pay the translator, because you cannot transfer money for services to Ukraine. So that is already an impediment for development of services. If Ukraine wants to be part of export also of services, it really needs to solve the problem with the payments. Second, I read on social media recently that EBRD made a big investment into Ukrpochta, which is an amazing project, because I also bought some pieces of art from Ukraine, applied art, which never arrived currently by post. Again, I think with this investment, hopefully Ukrainian SMEs will be able not only to deliver products, but also services to its neighbors. The economies are changing with this disruption of international trade. We can see all the companies, I mentioned it last time as well, developing China +1 strategy, where they want to have one more country where they move their both services and product production, and factoring becomes actually a very urgent product, and we really see what problems we can solve in Ukraine. And it just confirms every time we're doing something, it just confirms that we're on the right way, and trying to systemically and with good methodology trying to solve this problem. Okay, then let's start our journey. We will see, of course, any journey and any work would not be possible without cooperation and collaboration with the government. And in particularly, we've seen a lot of support both from the National Bank of Ukraine and the Ministry of Economy, who is also separately working on the receivable finance development. And this morning, we will have a speaker who will just tell us a few words about the development of receivable finance, their vision from the side of the Ministry of Economy. We have our next guest is head of SME head of SME Development Office, Andrei Slabinsky, who will tell us what the Ministry of Economy is doing, so to give us an idea how we can collaborate and join our efforts. Andrei, good morning.
Доброго ранку усім. Радий бути сьогодні з вами. Ще раз представлюсь, мене звати Слабінський Андрій, я директор Офісу розвитку малого і середнього підприємництва при Мінекономіки. Це дорадчий орган, який фінансується Європейським Союзом. І дійсно розвиток доступу до фінансування і альтернативного фінансування був і залишається у фокусі дій як і Офісу, так і на сьогоднішній день Мінекономіки. Для нас це передусім історія підтримки і розвитку саме малого і середнього підприємництва, що натомість, ми розуміємо, не може бути досягнуто без відповідних змін у регулюванні такого ринку. І так співпало, що поряд із запуском пілотного проєкту про безрегресний факторинг у публічних закупівлях, де ми намагаємося вирішити відразу дві проблеми типові для підприємців – це доступ до ринків збуту, в даному випадку публічних закупівель, і альтернативного банківському фінансуванню, мається на увазі банківському кредиту, фінансуванню у вигляді факторингу. І так само ініціатива з дерегулювання ринку факторингу в межах Білої книги розвитку факторингу України від Національного банку України. Віримо, створить той необхідний майданчик для об'єднання зусиль всіх зацікавлених сторін, як і з боку регулятора ринку, так і з боку Мінекономіки, Офісу та інших учасників, аби більше підприємців могли долати проблеми браку ліквідності, могли вирішувати проблеми розширення ринків збуту, аби проблема затримок із платежами і відстрочення платежу, які так само характерні і для публічних закупівель, і для приватного сектору, мали своє рішення. Тож ми розуміємо, що це питання факторинг в цілому і торгівельний факторинг, зокрема, це ще величезна ніша в Україні, якщо порівнювати з нашими країнами-сусідами. Тож віримо, що зараз в контексті карантину, в контексті переходу активного в діджитал, ми виконуємо роботу і план, який в іншому випадку зайняв би роки, в межах наступного року. Тож радий всіх вітати на цьому заході. Дякуємо партнерам нашим з EBRD, з Національної асоціації банків України, Незалежної асоціації банків України, Національному банку, і віримо, що попереду нас чекає багато цікавої роботи. Дякую.
Андрій, дуже дякую. Thank you so much. It's very interesting to see your efforts and your work. So yes, and it's we are very happy to continue our cooperation together. I'm sorry, my translation got, I don't know, somehow I have, okay, so we would be very happy to join our efforts together, and especially next year when we start working, we will tender for consultancy services, and we'll start working also on drafting law and see how to build this exactly the product in Ukraine. So on our journey, as our journey continues, I want to introduce to you our colleague in Ukraine, Vladislav Berezhny, who many of you know quite well, and who's been instrumental and key team member to support our efforts to build factoring in Ukraine. Vladislav will tell you a little bit about, to set the scene now, as we now can imagine EBRD's work overall in Ukraine. Then we could hear Ministry of Economy, their plans and their work to develop and support SMEs. And now, as we trying to zoom in on the problem, Vladislav will take us through the work that we have done so far. And what I am particularly proud of, that we have done this work this year, despite of the closure of our offices, despite of the major unprecedented disruptions. And I would like to thank Vladislav and the whole team in Ukraine for, for bringing us here. Vladislav, over to you.
Thank you, Kamola. I will continue in English to allow our international guests and experts to really understand the context of today's event. We have had a very interesting process of self-organization and creation of new areas in trade finance market in Ukraine. Our activity started in a factoring area, started 2 years ago with one of the conferences dedicated to sharing knowledge on factoring inside the working community of banks, and sharing it with the National Bank of Ukraine to understand what is missing in Ukraine for development of the full-scale factoring market. And it appears that our greatest wish to have all the organizational and regulatory work to be concentrated in the National Bank of Ukraine, financial regulator of banking industry and central bank, has been somehow implemented eventually, thanks to the introduction of the law, so-called split, to share all the responsibilities of previous State Commission on Financial Services, sharing it between National Bank of Ukraine and State Commission on Securities. So now factoring operations have been given to the National Bank of Ukraine for supervision and development. And at the same time, the community of bankers have also realized that the current operations in this area are really ridiculously low, and we have to do something to develop this volume. I would like to ask Spiros to show us the first slide, just to understand what has prompted our efforts and interest to develop this market. So altogether, our trade finance activity in Ukraine can be, as everywhere, defined as off-balance sheet portfolio and on-balance sheet portfolio. Off-balance sheet being letters of credits, guarantees, and analyzing promissory notes, the major part represented by these three products. And on the balance sheet of the banks, we have certain volume of operations in factoring, and when we speak about it personally, trying to guess what's going on, of course, we all consider our volumes dear and big. But when finally we have gathered statistics and this was obvious for the market that even the biggest banks with big volume of operations altogether combined generate the portfolio of just 1 billion, yes, altogether, if combined, yes, it's $3 billion equivalent, meaning 3 billion hryvnia, excuse me, I'm not that used to speaking on with the online material. I just want to show that this is a volume that can be considered important only in the context of our local market, local conditions. In comparison with volumes of neighboring countries, it is really very, very small. I would like to switch to the next slide, where with the statistics, no, just one slide. Yes, here. Even if this is statistics gathered for the previous conference, the situation hasn't changed much. We really 10 or 100 times smaller market than the neighboring countries in terms of factoring. So what's the matter? What's the problem? Excuse me. Oh yes, please. We continue to ask participants to switch off microphones when you are not speaking. So the idea, the problem in Ukraine. Excuse me, Dragana. Yes, thank you. The problem of Ukrainian factory market is that for years the notion factoring was used for the completely different operation. It was a term mostly used for trade, for operations with debts and assignment of debts, sale, purchase of credit portfolios, and factoring as such was in a legal deadlock. There were no possibilities to run these operations with all the potential that exists in the world, with the more comfortable risk parameters assigned to factoring transactions. And it was also part of our work to promote this understanding inside the National Bank of Ukraine and share this view within the banking community, to make joint efforts and lobbying activity to change something in regulation to make factoring more attractive transaction. However, of course, small steps and partial changes are not enough to really change approach and change the situation on the market, particularly when we have received an advice from our colleagues in Poland, where the success has been attributed to joint efforts of the Association of Factoring that started to make really complex and organized measures and efforts to change the market. We have seen how implementation of this approach makes things work really well. That is why, starting from this year, we have, thanks to also eventual great event that National Bank of Ukraine has taken charge in managing supervision of the factoring market, we have started a completely new approach to creation of the market of factoring in Ukraine. So I ask to switch to the next slide. We have a really dramatic moment in the development of our financial sector. We have, as always, a great role of trade in the economy of the country, and particularly in crisis times, as in 2015, as it is in 2020. We need trade to become one of the drivers of economic growth. And this understanding is shared by, I understand, every economic agent in this country, from small company to the big company, from small entrepreneurs to big banks. We have adopted a new law on split, and we have now a very consistent and reputable regulator, National Bank of Ukraine, in charge of process of regulating this market, monitoring, statistics, setting standards, and this is a very good thing for us. We have many interesting developments in the market, and one of them is changes in IT industry and overall adoption in the world of electronic documents workflow, which also may help us to create factoring market from scratch on very good technical level. So what is our approach of a community of the banking system of independent association of banks in Ukraine to development of market today? Next slide, please. Yes. We have realized that we need to divide our work into major streams. One of them is to build a community of people who would be interested, passionately involved and committed to development of this market. We started with the work group on the basis of International Association of Banks in Ukraine, and we continue to build this community. We invite all legal professionals, companies that would like to set their business in factoring and switch from any other activity to this market, to join forces and to create rules, fair rules that would be built on the best examples of international factoring community to make our business as transparent, as fair as possible. We also need to build market visibility and involve all stakeholders in this process. Buyers, sellers, who are main clients of such services factoring, but also we need to see and communicate with associations of buyers, sellers, exporters, importers, agri-producers, and this common knowledge, sharing of this knowledge would help us to realize how we do every next step together to come to a real factoring market in Ukraine. We want to change regulation further. Split law is not enough. We, of course, need to change there many other smaller things like risk management, like technical operations in factoring, like better understanding of assignment process. We also need probably to review the accounting rules and standards in this area to match this modern standards of factoring. And all this work will be done in close cooperation with the National Bank of Ukraine. And of course, IT infrastructure is something that is crucial for building a new factoring market. For all these directions, we have a wonderful, knowledgeable experts today. I invite all the audience to listen to examples of implementation of the rules, creation of IT infrastructure on the market, to how to reach the market participants with our ideas. Just for the sake of better contact with the audience, I switch switch language. Дорогие коллеги, я призываю вас послушать сегодняшние презентации. Все 3 часа следующих, которые мы составили программу, они призваны как раз узнать самый лучший опыт, который касается создания правил работы на рынке на примере английской ассоциации факторинга. Как создавался настоящий суперпрофессиональный IT-рынок, IT-инфраструктура рынка факторинга в Турции. У нас есть несколько представителей различных турецких институций, которые приняли активное участие в разработке программ, разработке самого дизайна рынка. И то, как это заработало, является прекрасным образцом для нас. И, наконец, у нас есть час, посвященный маркетингу, как проникать в голову к нашим клиентам, как увлекать их нашими идеями, что должно привлекать в продукте факторинг и как именно менять практики, допустим, работы на рынке, где принято было, допустим, иметь большой объем наличных операций, как проникать в сегмент малого бизнеса и микробизнеса с предложениями факторинга. Об этом нам расскажут тоже наши коллеги из стран, где эти проблемы удалось эффективно решить. So I welcome today's participants. I ask everybody to be active, to ask questions, to make notes, and to come back tomorrow to continue our discussion in our local community, how to go on and how to be successful on this road to factoring market in Ukraine.
Vladislav, thank you so much. It's really exciting to see our ideas and discussion to come to actually to take more physical shape. And now I just was commenting on our group that 94 participants on the call means I'm always impressed how professional and how united is the group in Ukraine, because we have here not just factoring specialists. We have full trade finance players, the players of the market, people who are actually moving international trade in Ukraine on daily basis. Not all of them cooperate with us, but I'm really happy to see all the, let's say, who is who in trade finance today on the event. And it's true, Vladislav, split law is not enough. We have to take it and adjust it now and build our own legislation and structure of the association and the rules for the factoring. And indeed, I do confirm that we have absolutely unique set of speakers for this afternoon that found time. And again, it's another thing that Ayşen also really surprises me in the sector. For example, our colleague Shirin from Egypt, Egypt's largest bank, she was an interesting speaker, and she just confirmed yesterday to even though at such short notice, to take part in this event. I really enjoyed to see camaraderie in the sector between professionals and sharing this experience, even though again on the market we are competitors, but among professionals we are collaborators, and it's a strong spirit of collaboration that is driving this construction of this product in Ukraine forward. So, okay, then on our journey, we now go to Amsterdam, to Peter, who will again take us. So we further zoom in from EBRD's work in Ukraine. We zoom in into the product itself, and Vladislav gave us a good feeling what's coming into cinema near us for the next year, what has been done. And now if we take the product itself on the global level, again, Peter takes us to the products itself, how it is evolving on the global arena, so that we could take into account the experiences of colleagues in other countries. And I do repeat that in the afternoon, please make sure that you have time, because we have a very practical case studies from the colleagues that will be speaking a bit later on. Peter, welcome.
Thank you, Kamola. Thank you so much. I want to thank you, of course, Alexander, and all your colleagues at EBRD for doing such a great job on behalf of not just Ukraine, but all of the countries of your territory in promoting factoring and helping develop this, I think, very important product. So thank you on behalf of FCI. If you can just go to the next slide. I mean, my general introduction is really just a brief overview of the industry, talk a little bit about the risks and some of the developments, and of course, mention the effects of COVID. I will say that, you know, we had this event, 6 weeks ago, it seems, 8 weeks ago or so.
Yes, September.
Yeah. And so I try not to repeat too much of what I had talked about, although I know there's a lot of people that have not seen this. So there's a few, let's say, slides that I'll go over that I showed last time, but I have a number of new, let's say, topics and discussion points. First is, you know, FCI. I mean, you can see here we're nearly 400 members. We are concentrated in the EMEA region, so well over 50% of our membership is in EMEA. But you can see here, Europe, Western Europe accounts for 22%, Central Eastern Europe and the Middle East accounts for approximately 25%. So it's a very big region for us. But you can see Americas, we're really all over the place, 94 countries. Okay, you can just go to the next slide. And you can see the growth. I mean, and this follows, you'll see in a second, the growth of the industry itself. The most important, of course, is the Central Eastern European region, which has been the largest growth region for FCI in the dark blue over the last 25 years. It is now, has exceeded Western Europe as the largest region in FCI. Excuse me, the light blue. Of course, the second largest region growth is East Asia, so the Greater China region. The next slide. Next slide, please. Yeah, and this is just a picture of the EBRD region, and you can see we have 115 members in total, and the biggest, of course, is Turkey, followed by Poland, Russia, Greece. So these are some of the biggest countries. We have, you can see here, broken down the CE region in terms of volume grew 9%, and last year, or an average of 11.7%. So it's probably one of the most successful regions in the world in volume growth. You can see the SEE region had been affected predominantly because of Turkey over the last 2 years. It's declined significantly because of the issues economically and the geopolitical issues there. And then the Middle East is the smaller part of the region, but you can see growth of 12% last year, very, very strong, and an average of 4%. Just go to the next slide. And Ukraine Exim Bank, of course, is our member in the Ukraine. And this is just a picture of the education. You can see here, the FCI Academy is one of the most sought after aspects of membership in FCI. We have right now 10 courses. We'll have 11 probably by the first half of next year. We're adding one on reverse factoring. But you can see there's been phenomenal growth. And of course, in the area of webinars as well. You can see that in the right-hand side in the light blue. But from the map, you can see it's utilized everywhere. But obviously, very significant concentration in Central and Eastern Europe. Next slide. And this is just now getting into the volume. We have grown on a compounded annual growth rate on the last 20 years of 9%. Been a phenomenal growth rate. And you can see last year it grew a little over close to 5.5%. The three growth stories here is Europe. Europe has accounted for the largest percentage of that growth over the last 20 years, but especially since the financial crisis. The Greater China region, and international, cross-border, which is the dark blue. These three have been the biggest influence on that growth story, increasing from a little over 500 billion in 1999 to nearly 3 trillion today. And the largest region is Europe, accounting for 66%, followed by Asia at 25% in the Americas. Now, next slide, please. Now, this is just a picture of factoring in the EU countries. The EU is the weight, the heavyweight within the entire region. The biggest trading market for all of the countries in Central and Eastern Europe and the Mediterranean countries, Middle East, North Africa. But you could see that the growth, as I mentioned before, has been phenomenal in Europe. Over the last 7 years, you know, you could see it's been growing between 5% and 8%. The top 5 countries you can see here in the EU, France exceeded the United Kingdom as the second largest market behind China, followed by the UK and Germany and Italy. Now you could see down below the challenges relating to COVID, UK having been hit the worst in the first half of the year, -14%, followed by Italy, France, Portugal, Belgium, and Greece, declining from double digit down to about 5%. The outliers, Spain, Germany, and Poland. Spain basically flat, Germany up a little, Poland, the Netherlands So a positive story there, which is really shocking to me, considering how devastating the second quarter was this year as a result of the shutdowns. Next slide. Now this just shows in the EU, first off, this is a very important slide because it basically states that 75% of all the clients in the EU are considered small. 14% are medium. So that means that, you know, basically over 90%, nearly 90% of the clients are SMEs and 11% large corporate. Now, on the right-hand side, you can see that the weighted average cost of risk for factoring, and this is as of 2017 for the factoring industry in the EU, was 0.09%. Now, if you compare that to the weighted average cost of risk, so provisions for the banking industry, so commercial loans, commercial and consumer loans, it's total 0.55%. So it's nearly 5 times riskier than factoring. And this is proven, and this is comes directly from the factoring statistics for the EU and compared to the data coming from the EBA around the same time, 2017, first quarter 2018. Next slide. Now, I like to show this slide because this is a great story relating to the growth of factoring. And you can see in the red, just a sliver back in the early 80s. But, you know, I always define 2000 as the date when factoring really started to explode with the growth of Asia, going from 3% to 25% of the global volume, and the growth in Europe and the growth in cross-border. These three influences has resulted in this huge growth spurt to achieve nearly $3.3 trillion in factoring in US dollar terms. Compare that to LCs. LCs have been predominantly flat the last, let's say, 10 years, certainly. They did spike a little bit, and they're spiking now upward because of the risk. And of course, it's hard to compare factoring and LCs because LCs are predominantly cross-border, where 80% of the global volume for factoring is domestic. So it's a little bit comparing apples and oranges, but it's a good comparison to see the story. And then, of course, the upside potential in total merchandise trade of 20 trillion. Granted, it's been flat over the last 5 years. It really hasn't grown cross-border trade, and 90% of that is open accounts. So that's the big story. And I have another slide, I didn't show it, that the factoring industry combined with other receivables products will grow from 3.2 trillion estimated to 10 trillion US dollars in the next 10 years by 2030. Okay, you can go to the next slide. Now this just shows the segments. The great story here is the growth in non-recourse factoring. It accounts for the largest share, 42%. Why is that? That is because of the demand for risk protection, the demand for off-balance sheet treatment so that sellers can remove these receivables off their balance sheet and get cash, get liquidity. Obviously, that helps their ratings if they're a publicly traded company. But also the Basel effect, the capital adequacy impact on the balance sheet of financial institutions when they are providing non-recourse factoring versus other receivables products or receivables loans, which require a 100% allocation. The other is recourse factoring. You can see here is 17%, invoice discounting 23%, and other, which also includes from our members reverse factoring. And then on the right, you can see 81% domestic, as I mentioned, a little over 80%, and 19% for international as a total. Next slide. Now, this just shows in the EU, again, I wanted to show you the variation of these products, what we call, notification, so notification of the buyer, and without recourse on the bottom. So you can see here on the far right, Germany. Germany is a country that utilizes the most relating to without recourse factoring. So, and that's partially due to the law requiring that when a factor purchases the receivable, they do it basically on a non-recourse basis, what they call echtis factoring, and providing liquidity financing against those purchased receivables. The next country is Spain and Italy. You can see that at 70%, 80% respectively. Poland around 50%, and then go to the far left, those that are practicing more recourse factoring, so not without recourse. Netherlands, UK. UK, for example, is a country that practices invoice discounting. And then next is France and Belgium. So a little more recourse factoring than non-recourse without recourse factoring. Now look at notification of the debtor. Notification of the debtor, you can see very high in most of Central and Eastern Europe, Italy, Spain, above 50%, all practicing, so notifying the buyer. And what does that do? That obviously prevents fraud. It basically ensures that the debtor is informed, that the debtor is known that they have to make a payment to the owner of that receivable, which is the factor. Whereas the opposite, the UK and Netherlands doing examples of non-notification factor, where the debtor does not know that the factor, the receivable, has been purchased by the factor. Okay, next slide. You can go to the next slide. Thank you. Now, I'm going to talk a little about COVID because I think it's important. I showed this slide last time, and their third quarter figures are trickling in, and so obviously a much more improvement, but the second quarter was a disaster. You can see South Africa having the worst impact, a minus 50% drop in GDP, the worst recorded probably maybe in history of any country. Followed by the United States, 32% minus, India, UK, France, et cetera, all the way down double digits. Okay, go to the next slide. And that was as of the second quarter. The third quarter, I'm hearing the only exception there was China. China showed a small increase compared to the first quarter, where they showed a big drop. Now, I want to kind of look at the industry, the effect of the industry, and I'm going to look at two areas of risk for the industry. And one is disputes, what we call dilution. And you can see from 2009 to 2019, since the financial crisis, the industry has gone up and down in terms of percentages. I would say the average is a little over 6 to 6.3%, if I'm not mistaken. It's that light blue in those categories. Some years have spiked. Of course, look at 2009 on the left-hand side during the financial crisis. It got as high as 9.3%. Now go to the right. You can see that there was a huge spike in December 2019 to March 2020 and June 2020. It represents a 160% increase. Excuse me, no, I apologize, 40% increase in dilution risk during this period. Now it's dropped significantly in the third quarter. So going back to normalized figures, but this was an indication of the impact of COVID on supply chains and the issue relating to dilution as a result of problems in getting product, problems relating to delivery because of issues with transportation companies during this period, et cetera, et cetera. Okay, you can go to the next slide. And then I want to show the effect of factoring on past dues. And this is a very important topic, which leads me to my next topic. And you can see here, on average, it's around 17 days, okay, over the course of the past 10 years from 2009. It got up to 20 days past due, so a little higher. Again, the average over this period has been around, let's say, 17 or so days. Now go to the right, and you can see the horrific impact on COVID, from COVID on the factoring industry. It increased this time by 160%, from a little over 15 days to nearly 39 days from December 2019 to the first quarter of March of 2020. Now it's come down a little bit, but it's still very, very high, double what it normally is. And this is due to the issues relating to force majeure, renegotiation of payment terms between the seller and buyer, And I can tell you just from our vantage point relating to members that we've heard, we did a survey, something like, I think it was 25–30% had to renegotiate terms. So some countries are worse than others. The US has been hit horrifically due to the bankruptcies and the slowdowns there. EU has been affected a little less, although there have been a number of cases of slowdowns and bankruptcies. Go to the next page. Now, I want to show, before I go into this last topic of past dues, this being the theme, so to speak, and that is, you know, I think everybody knows this, but for those that are either new or semi-new to factoring, everything in factoring revolves around the receivable. And what is the receivable? Well, the receivable is an asset, kind of like an intangible asset that you can't touch and feel on the balance sheet of the seller. And there are fundamental rights that seller, that creator of the invoice, or the owner of the invoice, or what we call the transferee, you know, the one who received the receivable as a result of the assignment due to a factoring transaction. And these rights are the right to collect, to enforce collection, legal enforcement as owner of that receivable, the ability to modify that receivable, modify the terms as owner representative of that receivable, the right to sell or assign that receivable to a third party, and the right to pledge that receivable to a third party. The risks on the right-hand side of the creditor, you know, are the inability of the buyer to pay, which is the greatest risk, the commercial risk. The second risk is what I referred to earlier is dilution, the dispute risk, or the raising of defenses by the buyer due to an issue, and of course, set-offs. So for example, if the seller is selling product to the buyer, or that buyer is selling product to the seller, that buyer can then offset their rights against the invoice that they owe to that seller if there is a mutual relationship. So this is just the picture. You can just go to the next slide and now transition to what factoring is. And that is basically a three-party arrangement between a seller, the creator, what we call the factoring client, the factor, and the buyer, the purchaser of the goods and services from the seller, what we call the debtor or the customer. And so this is important because this sets up the purchase of the receivable, so the transfer of ownership, the transfer of those rights against the debtor, whether it be the debtor in the country of the seller or the debtor outside of the country of the seller. Basically, I'm not going to get into it because that will be discussed a little later, but you know, it sets up the whole relationship relating to the financing against that receivable and all the rights and protections that factor is afforded as a result of the factoring a contract and the purchase of the receivable. Okay, next slide. Now, I want to talk specifically about one example of an issue that is affecting the factoring industry, and there are many. There are many challenges whenever a company sets up a factoring. EBRD does an incredible job in providing the tools to create a solid legal framework in the countries of the countries that they operate in. But there are issues that raise up, that come about, that have issues, that cause issues for the factoring industry. And one of these is what's called the definition of default in the European Union. And I'm going to use this as an example of what regulators and the factoring industry are faced with when a country imposes laws that, you know, they think are good for the country, but they don't take the overall assessment of how the industry will be affected. So FCI is greatly concerned about the new definition of default regulation that was passed by the European Commission and is being regulated by the European Banking Authority. FCI, together with the EUF, which is the Factoring Association for the EU, have been in discussion with the EBA for the past few years on this topic. Starting in 2016, we've sent numerous letters and we've had meetings. And it represents a great example of the unintended consequences when regulations impacting the banking sector are affecting the factoring industry, especially when regulators and government officials do not take into account the special nuances and the unique characteristics when factoring, in terms of what factoring is all about. Now, what is this? What is this new definition of default? What happens is they require that any factor that has exposure on their balance sheet, any invoice that goes past due more than 90 days, it must be basically reported as default, so provisioned after 90 days. Obviously, that has a significant adverse effect on profitability for the factor and as well on the capital requirements for that factor. The new definition of default could result in significant adverse effects on the factoring industry as it assesses defaults. In some markets, this will increase provisions and potential losses when in fact, the likelihood of factoring leads to default is very, very remote. We believe the issue stems from a lack of understanding of what factoring is at the EBA and in this case, the European Commission and Parliament level. As a result, we had organized last week a meeting with the new executive director and his staff of the EBA to explain these unique characteristics, such as, for example, the power of factoring in the slide here, the double credit assessment. So you're assessing the factor, you're assessing the client, and you're assessing the risks of the debtor, their financial capability. You're combining those limits, and you're assigning the receivables, which is a strong asset with a high recovery rate. Now, the position of the debtor, there's no contractual relationship with the debtor. It shouldn't be with the factor, with the debtor. Well, I see. There's no contractual relationship between the factor and the debtor. The factor needs to avoid being or invading the supply relationship, forcing the seller to basically accept, for example, extended terms. They have to act fairly. The debtor could ban the assignment of future receivables if they're upset, if local law permits it. So there are issues relating to the debtor. But in general, at this last point, debtor practices may lead to late payment. Yes, I mean, the debtor can raise a dispute. The debtor has issues relating to the contracts because these are commercial contracts. It isn't a loan. It is not a loan whereby the obligor has to pay no matter what. There is conditions built into a commercial contract. And if those conditions are not basically achieved or met by the debtor, by the seller and the debtor, then there are problems. And this is the thing that they don't take into account because they think factoring is just a discount of financing of the SME. So again, it goes back to education and learning. Please go to the next slide. The underlying issue stems from the legal differences between factoring and commercial lending, commercial loans. If you can go to the next slide, please. Trade receivables under a non-recourse factoring transaction must be differentiated from a commercial loan. And this is key. This is key. And I know some people from the Ukraine Central Bank and government are with us today. And I think they understand this. I think most people that get to know factoring understands this, but it is critical. As a loan is a legally binding agreement that a borrower undertakes and commits to make repayment at a particular date in the future. Whereas factoring is not, meaning it has conditions, those conditions have to be met. In other words, the application of factoring and specifically trade-based receivables against loan-based principles, as the EBA has done, is just not well thought out. To automatically identify the default of buyers based on the due date of invoices is misleading and ultimately creates unreasonably high levels of default exposures, which are inconsistent with the true financial condition of the obligor. Take a look at this slide. If you can actually go back to the previous slide, please. You can see here that the Italian Factoring Association, so on the left here is just, this was a program that the Italian Factoring Association did to determine the effect and impact that the new definition of default would have on the factoring industry, which is basically a $70 billion industry. And basically, or excuse me, 70 billion euros. And they did an assessment on exposures in 2018, what would happen. And you can see here that, and so the left-hand side, all this writing is really just how they came up with this study. But the most important thing is the outcome. And you can see here that in government receivables, so central government receivables, 30%, regional government receivables, 63%, and national healthcare system receivables, which are quasi-government obligations, you can see that 30%, 63%, 94% would have to be provisioned of the total portfolio. So SMEs and corporates are less, 25%, but still very high. So that means that 34% of the entire factoring portfolio in Italy will have to be provisioned, will have to be considered in default. And the other thing, if you go to the next slide, the other issue is that there are significant other consequences that the industry will face, including the second one, which is what we call pooling. So if you have one invoice that goes past due on a large corporate, a large retailer, for example, the debtor is a large retailer, that invoice will have to be provisioned, and all exposure of that company, not just in the factoring company, but all the way up to the bank level, has to be defaulted, has to be provisioned. So it is this kind of trickle effect that this new definition of default has is just really extremely consequential. Now, there are countries in the EU that are not going to be as affected. Certainly government receivables, we know, especially in some of the southern European countries, are more affected than others. But the fact that every country is going to have some, let's say, adverse effect as a result of this issue, which shouldn't be an issue, because we know that receivables pay, trade pays. So you have type 2 errors on the left here, what we call false positives, and this could be due to dispute resolution, disputes. This could be due to delays due to the buyer, due to, let's say, issues relating to the contract. I mentioned the pooling or the contagion. They're what we call adverse selection of the debtor, of the debts. This adverse selection issue, for example, if you're having these large corporates and you're defaulting them because of this requirement by the European Commission and the EBA, this is going to cause factors to not to do business. So who's going to be affected? SMEs. A general increase in systematic risk, and of course, at the end here, the worsening of SME conditions. I could go on, but I think you get the point. This is just really a very concerning development, one that we've been aware of for 4 years. We have been providing more and more data and information. We had a very good meeting. I do believe that the EBA is going to listen to us this time, I should say finally, and I do think there's going to be some, let's say, resolution. But the problem is that the NDOD comes into effect the 1st of January 2021. So we don't have a lot of time. So I can tell you, yeah, we're concerned. Please go to the next slide. And this is the conclusion. So this is just one example of the challenges our industry faces. We are seeing similar negative effects on reverse factoring, credit insurance, and other areas. Even though we will experience a bumpy year ahead, factoring will be in high demand once the crisis subsides. In such a difficult environment, companies will look to mitigate the risk of their receivables. However, during this crisis, receivables as an asset class will be and have been tested like never before. But their secured nature and controls that factoring affords will make them more attractive to investors in comparison to traditional bank lending. But notwithstanding COVID-19, you can see there are many challenges that could have a chilling effect on our industry. And thanks to the efforts of organizations like EBRD, the EUF, of course FCI, we can at least stand a fighting chance to help bring a rational sanity to some of the regulations most impacting our industry. Again, let me thank the EBRD for organizing this great event, but also the Ministry of Trade, Mr. Andre, and also to Vladislav, who earlier spoke. and of course, all the speakers later. And again, I have to say, our member in the Ukraine Export-Import Bank. Kamola, thank you very much. And that ends my speech.
Thank you, Peter. Thanks for the presentation. Very insightful. You covered a lot of topics. Maybe some of the topics is a bit sophisticated and advanced for the time being for the Ukrainian market, but you really touched and emphasized very, very important topics for the COVID days and for the risk. Any comments, Kamola? Do you have any comments, or shall I invite the next speaker?
I think we would be good to we overrun a little bit on time. Would be good to give people a short screen break, maybe, or not, or shall we continue? Up to dear colleagues, what do you think? 5 minutes break, or we continue? How do you feel?
Kamola, I mentioned to Aisha, I have a meeting that I have to leave in an hour. So I'll be here for the next hour, but if you have any questions, I'll be glad to answer them.
Yeah.
Just know I have to leave here about 11:15.
Good. We will keep the questions in the chat area.
Thank you. Okay.
Yeah. Okay, so we're going strong. 98 people, almost 100. I think, look, while we have a momentum, let's continue then.
Okay, then. So now we are going to the UK, to Edward Wilde, our legal expert and also member of FCI Legal Committee. You know Edward from last time, but he will talk about different topics today. So he has a very good presentation with 2 parts. By the way, during the presentation, if you would have questions related to his presentation, of course, please type your questions in the chat part, in the chat area on your screen. And then at the very end of the day, of the conference, there will be a special legal Q&A session, and we will be together with Edward, and he will give reply to your questions. Please don't forget to type your questions in the chat area. Thank you. Edward, the word is yours.
Good morning. Good morning. I'm very happy to be back. Before I start, I'd just like to comment on some of the previous speakers. I have had the benefit of a long discussion with Vladislav as to your intentions, and I'm very happy to dovetail this presentation, which I hope will match some of your aspirations. Also, I would like to emphasize Kamola's concept of cooperation and collaboration. It is absolutely essential that whilst you are all competitors in this market, on the basic functions such as education, common procedures, and most importantly, discussion with the authorities, that you do cooperate. You are not competitors in these areas. And Peter has emphasized the dangers of regulators with a poor understanding of factoring. And this reminds me of a year I had in negotiations with the European Commission, who took it upon themselves to decide that factoring, non-recourse factoring, was a form of insurance. Now, none of the factoring companies in the UK are registered as insurers unless they happen to be major banks, and to operate without an insurance license is a criminal offence. So very important that you use a common approach to ensure that regulations are for the benefit of successful factoring. And therefore, I have entitled this speech, Successful Factoring, Using Regulations and the Law, and there is a question mark at the end, because I'm going to just mention, as I did last time, the fact that in the UK we have no regulations. But in my view, I think that in the early stages of developing the factoring industry, regulations would be a good idea. And the fact that we have no factoring laws in the UK may or may not be a benefit. Next slide, please. And the next one, please. Okay, so I'm going to give you a story in two parts. I will just quickly tell you of the success in the UK without regulation. But there is a reason for this, and I will come to that. And it's one that I think you will find of benefit in your future plans. And then the second part are the issues for a trade association. And I have had 25 years as legal secretary of our Factors and Discounters Association. It is not an easy path. It takes a long time because we started off with factoring both in commercial terms, legal terms, and legal terms. It was considered as a lender of last resort. Anyone who took a factor would shortly become insolvent. And indeed, there were factoring companies that made a lot of money in taking on clients who were about to go insolvent because they could raise extra charges, and there was a lot of money to be made out of helping a company for, say, a year and then allowing them to become insolvent. This is something which you have to overcome, and our problem in the UK is that we have a very inquisitive press, and you can spend a year building up a good reputation and it can be destroyed by one bad press article. Next slide, please. So just to remind ourselves where we are in the UK, no regulations, no specific factoring law, 400 billion of receivables factored last year, with 28 billion US dollars at any stage being advanced to clients. 42,000 clients, which is a figure that never seems to go up, but what does happen is, and it's a testament to the success of factoring, is that the turnover of those clients does increase, and the advantage is obviously that there is greater flexibility in lending levels than straightforward bank loans. And the most successful product, taking 80% of the market, is the confidential invoice discounting. So an assignment of the receivable, but the debtor is not advised unless the client is in breach of the agreement. Next slide, please. Next slide. Yep. Okay, just a few background issues. There's no restriction on anyone owning a factoring company. You can come from Timbuktu, or you can come from Europe or America. You can own a factoring company. Nationality is irrelevant. And secondly, who can manage or work in a factoring company? Anyone. There are no restrictions. There's no qualifications or approvals needed. Now, this is an area which is very sensitive, and that is why one of the first benefits of any trade association is to ensure that people are given knowledge, are trained properly. Next slide, please. Next slide. I think this is self-evident. Anyone can lend money to a factoring company. Anyone can take shares, bonds, debentures. There is no restriction at all. And so we have factoring companies in the UK owned by European entities, owned by American entities. I'm trying to think of other areas. Oh yes, we have one owned by an Australian. So anyone can provide finance. Next slide, please. This is a picture of our Bank of England, and this is a tourist bus going past, and you would think that the Bank of England would be regulating factoring companies. The answer is it's not. There's no specific regulations for factoring companies. There is no licensing of factoring companies, no licensing of their staff, no product requirements or restrictions, and so there is no dedicated regulator. And laws which are generally applicable to all businesses apply. Next slide, please. Now, so this is a personal opinion that the absence of regulation has helped the development of factoring. As I've mentioned before, we were the lenders of last resort with a very poor reputation. Judges hated us, and we usually got judgments against us if there was any doubt. And now factors are mainstream providers of working capital to the small and medium-sized enterprises, the SMEs. But here's the but. In my view, it is the result of an effective self-policing trade association. We started off as the Factoring Association, and that was for 25 years. Now we've merged into the wider Banking Association. What is this? What is the main efforts of the association? Well, to avoid reputational damage, as soon as you get damage to your members or to the product, then the authorities will want to impose regulations. So avoid reputational damage, because reputational damage leads to interference by the authorities. And that is the aim of being a trade association. Now, I will come in a moment. I think there are benefits of regulation. But if there is to be regulation, you as factoring companies and banks should be in at the start to ensure that the regulators understand the product, understand the benefits, and most importantly, everyone is clear as to why they want regulation or prepared to accept regulation. Next slide, please. So, repetition, but this is a subject that can be repeated. What are the benefits that we have received or we have noticed of having our factoring association? Most important is reputational damage is avoided. And I'll come to how we do that in a moment. Sharing best practices and knowledge. For the smaller factoring companies, this was the most important reason for joining. They did not have the resources to train their staff in-house, and therefore it was better to train with the rest of the industry. The side effect of that, of course, was networking, and the most important aspect of the networking to a small company was that they thought that their problems with clients, with debtors, with third parties were unique to them. And then they came along and they came to presentations with 100 other factoring employees or executives, and they found that these were all common problems. And in doing so, they were able to come to a common approach. So education, education, education. Third benefit, you speak to the government and to the regulators with a single voice. Governments want one party to go to. They don't want to have to talk to 30 or 40 banks and getting 30 or 40 different approaches. So speaking to the government with a single voice is very important. And what it does mean is that differences that you may have between you and which can be used by an offensive regulator are resolved behind your closed doors before you approach and discuss and negotiate with prospective regulators. But I come back to Kamola's concept, cooperation, collaboration. If you cooperate, and this is my experience in other countries where I've had to draft laws, cooperate with the authorities, you educate them because they won't know a lot about your business or they won't know the details of it. You can avoid these crazy regulations that Peter has already emphasized to us. So there are there are more benefits, in my opinion, of having a trade association than being unregulated. Next slide, please. So this is how we as a trade association have protected ourselves. I've mentioned a common training program. We also have our own examination system, giving diplomas, certificates, and so we have common examinations, common qualifications. We have, for people who've been through the system, we have residential weeks with a lot of play acting. My specialization is putting court cases together, and then the delegates have to argue or defend the cases. It's usually where there's fraud involved and guarantors are being called upon. But apart from knowledge, it's very important. Remember, we do not want damage to the reputation of either the members or the product. And this is effected. We have a code, which I'll come to. I'll tell you what's in it in a moment. But the members, as an obligation of membership, have to abide and obey common duties to clients. That's the code. And then if a client or a guarantor considers that there has been some breach, or just if he has a complaint, and most complaints will come within the code, then there is an independent complaints procedure which uses mediation. This avoids going to court. This is very quick. It's done in weeks rather than the years that it would take to go to court, and there is no cost to the complainant. And then we keep this up to date by having an independent standards council. And I'll tell you who's on that in a moment. But they are not members, do not have a majority of members from the industry. They are there to protect the possible clientele. They look after the interests of the SME. There is a minimum capital for membership status. It's not unreasonable. I think it's about £1 million, about $1.3 million, which in terms of a factoring company will probably cover you for 5 or 6 clients. So it's not exclusive. And indeed, our competition authorities will not allow us to be an exclusive club for the big boys. Next slide, please. Okay, so we call it the standards framework. What is our aim? Well, the principal aim is to give clients and guarantors confidence in using factoring. For many of them, it's a product that they probably don't know about or don't know a lot about, and they need to be confident. And it's one of the obligations before you sign a client is that you have to explain that there is this code complaints procedure. So when we set it up, when we wrote it about 8 years ago, our aim was to be of benefit to the SME. We wanted it to be as independent as possible, easily accessible. So, as I say, there is no financial cost to the client in going for mediation, whereas if they went to court, there are considerable costs involved. It's focused only on factoring, so this is not part of a general security code. And in our view, it is effective, and I'll come through and at the end, I will tell you how effective it is. So it comprises 3 core components. So there's the code of conduct, which I'll go through in a moment. There's the complaints process using an organization called Center for Effective Dispute Resolution, which has about 20 years experience of commercial disputes. And then there's the Standards Council, which keeps the code under review, and the majority of its members come from outside factoring. Next slide, please. Next slide. So here's the code. What we wanted was fair treatment of clients and guarantors. Remember, you always are the stronger party in the relationship with the client. The client wants your money, and you can be a very strong and overbearing party to the relationship. And this aims to overcome that. You've got to be fair. Compliance is a condition of membership. So the majority of factoring companies consider that membership of the association is a benefit. I was asked the other day, how do you stop people leaving the association? Well, the answer is there are more benefits in being members of the association than there are being outside. But compliance with this code is a condition of membership of our association. We've avoided detailed rules. It is principles based, and the principles, I'm sure, you cannot deny are of benefit to a relationship. There, as I say, there are 5, well, actually there are 6, but the first one is just to abide by the code. There are 5 principal requirements, which I'll go through in a moment. And then what we have done, we have written a guidance for each principle, which basically gives you examples of what we mean. So the first one is that you must act with integrity. You must deal fairly and responsible. Do not use your overbearing strength against the client, because remember, and I hope it's the same in the Ukraine, we have a very active and inquisitive press who are the first to report the wicked bankers. Indeed, there is a rumor going around the industry that the press will pay a large sum of money for a photograph of a banker with a large glass of champagne in his hand. This sells newspapers. So act with integrity, be fair. You must provide information on time. You must ensure that legal documentation is clear. It's no good writing a complex document in small print that goes for 50 pages, which covers every eventuality, which is written in the UK. You know, we've got documents that were written 100 years ago. You cannot do that. It's got to be clear, simple English, and you've got to describe what happens. I will come in a moment to the reason for complaints, but the biggest cause of complaints is fees, what you charge to your clients. Why is that? Because all the client wants is his money up front, and he doesn't realize that if he breaks the agreement, your fees go up. If you terminate the agreement, you come off risk, etc. Ensure this is all clearly set out. Obviously, comply with your legal agreements, and you must have a publicly available complaints procedure. Next slide, please. One of the benefits of membership is that if a client wants to move from one bank to another or one factoring company to another, there is an agreed handover procedure. It's supposed to take place within a matter of days. There are agreed documents which everybody will use, and it works very well. There's an agreed timetable. If there's any money to be handed over, the procedures are set out and the timetables. And it also covers the very difficult question of bank references. People were unwilling to give references. So we had to say, well, you can give a reference, but it's on the basis of no responsibility. But this handover procedure works so well that most people forget about it, and certainly the clients are unaware of how effective it is. Next slide, please. Complaints. And as I say, we are here to protect your reputation. Complaints are usually about fees and the effect of breaches of the factoring agreement or termination. And it's designed to be a benefit to the client. And first of all, the complaint has to go to the member using their in-house procedures. And then if there's no resolution in-house, then it goes to the mediation center. Now, it is independent. It will suggest financial awards. Remember, this is mediation, so these are only suggestions which the parties are free to agree to or not. It's not arbitration. It recommends improvements to the industry. Vital, there is no cost to the client. The member pays everything. Costs are about $1,000 a case, so it's worthwhile using your best endeavors to sort it out in-house before it goes off externally. It is, of course, confidential. It takes, this is the interesting thing, takes about 50 factoring cases a year. So it's one a week. And approximately 45% of the cases give some award, and I emphasize some award in favor of the client. The client usually wants the earth or the moon. They will get something. So it's worth remembering that nearly half of the complaints have some measure of of sufficient grounds in them for there to be an award. The client doesn't have to accept the award. He can reject it and take it to court. Next slide, please. And then we have the Professional Standards Council. Remember, they are the people who write the code and keep it up to date. So it's independent of UK Finance, which is the trade association. It has 7 members. The chairperson is not a member and cannot be a member of a factoring company. There are 3 other non-factoring industry members. At the present moment, we have a lawyer, a human resources director, and a professor of finance. And then there are 3 members coming from the Factoring Association. It's interesting that in the 8 years that we've operated this, there've only been 4 changes to the guidance. So they are general, they are principled, and they've stood the test of time. It does not itself deal with the complaint. As I explained, these go elsewhere, but it can make recommendations about a member's conduct and practices, and it can recommend to the trade association that a member's be terminated, that his membership be taken away. That has never yet happened, but it's there as a final sanction. Next slide, please. Possible future direction. First of all, we've got, possible future direction, regulation on the one side, and model law of factoring on the other. I won't deal in any detail with issues for a model law. That will take a day in itself. But regulation, let's have a look at regulation. Next slide, please. What are the let's be clear as to what we think the advantages are and what we're trying to achieve. Clear rules for everybody. So you should have fair competition. It should ensure that proven business standards, international standards, are used. You keep out the cowboys, you keep out the mafia operators, and financial side, minimum capital, and solvency rules. In my view, where I've seen regulation, if it is sensible regulation and not overbearing, it helps the reputation of the factoring industry, and it reassures investors in factoring companies and the clients. The disadvantages, I think we can cope with that. There will be an element of bureaucracy and red tape, and there will be time and cost of complying. And if people are penalized, well, then there will be reputational damage. So as I put as a final thought to this, what current bad aspects of factoring do you want the regulations to clean up? That's a question. Next slide, please. As for a model law, the advantages would be certainty. Factors can input at the development stage, and what you need is something that is easy for judges, clients, and debtors to understand without having to use expensive lawyers. But what it will give investors, clients, debtors, third parties, they should then know their position in one easy document. But, and it will need a well-functioning court system with knowledgeable judges for it to be effective. Next slide, please. Next slide. Well, far be it from me to tell you what you should be aiming for. So possible contents with a question mark. I do this with hesitation. But the use of the word factor in your title or describing yourselves as a factor should be something that needs qualification. And therefore, if you're qualified as a factor, then you're registered and licensed. The next issue is a public registry. Should there be a public registry of factoring assignments or factoring agreements? Then you come to the question of financing, qualifications for staff. Then the one that always causes us problems is information that must be given to clients, and most importantly, fees, how they are calculated and what the maximum amount, and what should be the sanctions for non-compliance with the regulations. What I would urge you to do is to avoid defining the products. Let the market develop the products via contract law. You don't need the government to tell you what goes into your products, because the products will develop through competition. Next slide, please. And then what to include in the factoring law. Next slide, please. Well, you need certainty, and the certainty in having a law on factoring would be that it should be easier for investors to fund, and you should avoid unnecessary disputes with clients and debtors. But there are four things that a factoring law should explain, and these would be the rights and obligations of the parties involved. The obvious ones are the factor, the client, and the debtor, but there are other parties who may have an interest, other security holders, judgment creditors, parties involved in an insolvency. Next slide, please. I think this is self-evident, but I think in due course you should be aiming for a law only about factoring. Expect to include improvements, particularly internationally accepted commercial factoring. So it should be domestic factoring and cross-border factoring. Next slide, please. I've set out here a list of possible contents of a new factoring law, which occur in other countries' laws. The form of the assignment, the form of the notice of assignment, what happens when you give a notice of assignment, what are the rights that will be assigned to you with the receivable. Very important that the debtor rights are clearly understood, as are the rights of third parties. Next slide, please. I think this is detail that probably can go on to another occasion. I would, however, emphasize item 3, that any law must cover the possibility that in one assignment you can assign both present and future debts. And by future debts, I mean debts, receivables that have not yet been created, for which there may not even be a contract. The 5th item is quite important because we all concentrate upon the assignment of receivables, and it's very important to consider what else do you need to be assigned to you, such as evidence of the receivable. What rights do you have to enforce the receivable? Number 7 is one that I'm often asked about. What happens if the same receivable is fraudulently assigned twice to get twice the payment? And this is worth setting out. And there are a number of potential answers. Just consider which is most suitable for you. And the last one, number 8, rules for nullifying prohibitions on assignment. One of the biggest areas where factoring can be stopped in its tracks is the buyer, the debtor, putting a clause in its contract saying that the receivable cannot be assigned. Now, this, as a matter of contract law, is enforceable. As a matter of public policy, it's a very bad thing. And the movement is towards nullification of such provisions. It takes a lot of thought. And I spent nearly 2 years negotiating on behalf of the industry with the UK government, so that a year ago, 2 years ago, they passed a law setting out that in general, prohibitions on assignments could not be enforced. So think that one through. It's not as easy as it sounds, but if you get it, it will enhance the product and will encourage the financing of SMEs. Next slide, please. These are details which I think, in view of the time, there is no need to go into, and I think I mentioned it last time. So let's go to the next slide. Next slide, please. And next slide, just the effect of notice of assignment. I mentioned the double assignment, the fraudulent double assignment. It is important that the law gives guidance as to which factor has the priority. Do you choose between the first assignment in time or the first to give notice of assignment? And then what do you do if the first to give notice of assignment knew of the prior assignment? And then you come into the whole issue of public registration. Next slide, please. This I have already dealt with. Next slide, please. Yes, very important that you are clear in your own mind that when a receivable is assigned, what also comes with it. We call them related rights, associated rights, and they're generally rights which assist in payment. And I think they're self-evident. You need evidence of the debt, so documents, proof of delivery, documents of title, guarantees, excuse me, and credit insurance. Make sure you get the assignment of your client's credit insurance. Next slide, please. Next slide. I emphasize that the product is the result of the factoring contract. And this is not something you should try and legislate for. But there should be automatic guarantees by the client, by the warranties, that it actually does own the debt and has the right to assign it, that has not previously been assigned. And for those of you who are offering credit protection, that there is no defense or set-off, and that there are no prohibitions. But you may say, well, that's very difficult. well, then you and the client can agree that the whole or any part of a model law should not apply. Next slide, please. You may care to exclude certain debts from your model law, and they again are complex arrangements which I've listed there. Next slide, please. Very important to give reassurance to the debtor that once he gets a notice of assignment, that his position really is not adversely affected. And therefore, it would be useful in any model law to set out the debtor's position. Next slide, please. One of the main issues we have in any court proceedings against a debtor is what defences, what set-offs can be raised against a factor. And these, I think, are very, I mean, it's sensible, it's self-evident. So if you've got damaged goods, of course, he can refuse, but it's worthwhile spelling this out. And then there are the closely connected contracts. So I've suggested that if there is a maintenance contract for a photocopier, and the photocopier has also been sold, and they're two separate contracts, breach of the maintenance contract should be set off against the sale of the goods. And then there's the whole issue of contra trading, which is worth mentioning. But remember that the debtor can always agree in writing not to raise defences and set-offs against a factor. You must only raise them against the factor's client. Next slide, please. And there we are. Thank you very much. Obviously, I'm more than happy to help in any way if you need what is basically experience of a trade association and some of the problems you can have. But I hope you found it of interest, and I wish you every success in the development of factoring and using a trade association for the protection of your good reputation and for the benefit of you, your clients and your staff. Thank you very much. I'm more than happy to take questions if you'd like to write them in, and it'll give me a chance to give you some detailed answer. Thank you so much.
Edward, thank you very much. Really, it was an excellent presentation again, and you touched new topics after the meeting you had with our colleagues in Ukraine on Monday. Thanks so much, especially for the importance of the development of a trade association in a new country and developing country. This is really very important. I have collected a list of questions for you. I'm going to email you the questions, and you can elaborate on the questions in the Q&A session for yourself at the end of the conference. Thank you very much.
Thank you.
Now I suggest to give a 5-minute break that we can grab a coffee, a tea, and maybe a little bit fresh air. Then after 5 minutes, please be back because a very exciting part will start in the second part. First, we have a presentation from a very senior and very experienced practitioner and expert in factoring in developing markets. And then we will have 2 different panel sessions with different speakers for sharing of best practice. See you in 5 minutes. Have a good break. Hi, everybody. Hello again. So 5 minutes is a very short time, as you see. It passed very quickly. Simon, are you here with us?
Yes, do you hear me?
Okay, yes, now I can hear you loud and clear. Simon, welcome. I would like to introduce Simon Peterman. Simon is our next speaker. And together with him, we go to Vienna. So today we are visiting almost all countries in Europe. And Simon is the coordinator, the factoring coordinator at Raiffeisen Factor Bank in Austria. And he's responsible for the region, Central and Eastern Europe. And he's a very senior executive in this field. Today, he will share with us his presentation about his best practice and experience in the area. Simon, the word is yours. You can share your presentation. Thank you.
I will try, let me know if this works. Sure. Do you see it now?
I can, yes, I can see it.
Super, then it should be super.
Yeah.
Thank you again, Hashan. As mentioned, I'm the coordinator or the manager who coordinates all the factoring units outside of Austria. And I have quite a few topics to cover today. So I'll try with the first one where of course, I cannot pass by without the challenges that we see in today's times, which is COVID, and that we all talk about, I'm sure, and the problems that this brings to the factoring community, and of course to the SMEs, which is also a bit of part of what I need to stress here. But these problems didn't really start now. I think these problems already started several years ago, let's say 10 to 12 years ago, with the financial crisis, which brought in itself a bit of lack of financing possibilities for SMEs. First of all, banks are and still are less open to financing small companies with low ratings. Buyers press their suppliers to extend the payment terms, which is also seen so that they get finance on the basis of their suppliers. Financing has become a bit more expensive, and digitalization hasn't helped a lot either in this case. We're hoping that in the next wave it will. But I still have to mention that factoring has coped very well with all of these crises and has come out a winner, especially because it's been very well recognized that, you know, even in the bad times after the crisis, we were one of the workout tools that banks used with some bad loans. It's a new way of new liquidity, alternative liquidity, and it's also quick liquidity, which is also important in these days. That you know you get the money very fastly and very quickly to where you need it. But to start off with the main topic, which I have here, is of course the topic of benefits of factoring. And here I want to, in the first slide, to mention that here we're going to talk about the features, so the services, the functions of factoring that factoring has, and its benefits. And the first service, which is one of the services not very often used anymore, I think we as Factor Bank use it only in about a handful of clients that we still do, which is called invoice or sales ledger management. And this is in a sense a service there where we kind of take over certain booking, accounting functions of the client to help them reduce their human resource cost and especially to give them a bit of better reporting on the availability of liquidity that they have. I have to say digitalization is helping here a lot, especially because you now already have this on hand on mobile. So this function is being lost more and more. The second function that factoring has and its benefits is the debt collection. And I have to say this was one of the most important functions or services that we performed after the financial crisis, because a lot of debts were not paid, and we as banks have the power, the strength, especially with all the legal support, the lawyers that we have to do the dunning, the collecting for our clients. And even more important, you can imagine if there's somebody owing money to an SME, especially if it's a big retailer or a big car industry owner, and a small supplier comes and asks for the debt and wants to get it repaid, of course they have less market power. We as banks have much more market power, so we tend to get, or we usually get paid the first. So you can imagine this is the really the service that these smaller SMEs use to help collect their money. Third function, third service, from credit management, which is one, which is really debtor assessment, so pre-assessment. We already help the clients pre-select their clients, can help them there. Of course, the other one is very important one is ongoing debtor monitoring of the debtors, which is also important for us, so that the portfolios we have in our books are good or performing well. So this is a really important function. And then, of course, this credit risk protection, so from bad debts or losses, which can be also to 100%. Of course, if you use the FCI two-factor international factoring. But of course, on the other hand, more often this is done through trade and credit insurance companies, which I know are still an issue with Ukraine, as they're not present at the moment. So at Radius, Eurohermes, Kofas, those players are not in the market, but hopefully that will change soon also for you. There, of course, the protection is only 80 to 90%. Last function, I think the very normal one, the obvious one, is the financing. And here, of course, you have 80 to 90%. So the new markets are less, more closer to 80%. The more mature ones are already going into 90%, 95% financing. But also from the other side, there are also other strong benefits for the customers. Of course, I said immediate liquidity, which I here put 48 hours. I have to say, in the case of Raiffeisen Factor Bank or some of our units, this can be also done in less than 2 hours from receiving the invoices. Here is it's written flexible and sales conform financing, which really means we are able to cover these seasonal peaks, especially when in the agro industry, in certain other seasonal industries where we understand the business, we understand how to perform at certain times, the money and when to collect. Usage of discounts, especially this casas conto. If you use factoring, you tend to use these benefits of casas conto. And then there's, of course, the diversification of funding, alternative funding, and of course, innovative form of finance. Here, I have to say, factors tend to be very innovative, and when it comes to finding, web solutions, transactional digital solutions, that's very important with factoring. More safety, I think we mentioned these two. So in non-recourse, where you get the protection for credit insurers, but of course, what it also does, you can also take it on your own books, of course, as a bank. But of course, that allows the clients to really focus on their core business and really on the sales, and we do the collection, the risk management for them. Last but not least, very important, especially in the last few years, we've seen that this active balance sheet management has become very important and very attractive. Also bringing in some of the previously unfactorable industries into becoming factorable, especially where through factoring to selling the receivables in their balance sheets, it's improved. They get improved ratios due to balance sheet contraction, improved working capital ratios, and of course terms and conditions through that also by banks, by other financiers. So really important functions. So again, we see, let's say, pharmaceutical industries coming in, telecoms also coming into factoring much more regularly than we did before. Next topic that I was asked to also talk about is trade finance alternatives. So comparing factoring to trade finance, and as I know most of you come from the trade finance, bear with me with this, but I think it's a good picture to show you where and how to compare factoring. What are the benefits of factoring to the more traditional trade finance products, which of course are more known often in the market. And I'm just give you an overview of the products and the focus value proposition, and then the overlap of how this overlaps with factoring. Of course, we have the traditional financing, products really focused on clients, plain vanilla products, overlapping with domestic and international factoring, invoice discounting, asset-based lending. So this is really plain vanilla product. So the usual trade finance, or the next, which is LCs, LGs, so letters of credit, letters of guarantee, where it really focuses on documents, invoices, transport documents, insurance, which are probably the most universally accepted methods of payment, and very well known. And of course, shifting the the risk from the buyer to a financial institution, to a bank. As Peter Mulroy already mentioned here, the growth of LCs has stabilized and has not seen a lot of growth, while on the other hand we see these open accounts really growing, and I'll talk about that a bit more in the next slide when I talk about international factoring, this two-factor FCI business that we do. Cash management, we note really cash flows, which is very similar to to factoring to optimize the cash flows. Another trade finance topic, which is becoming very a hot topic right now, supply chain finance, which is closer to reverse factoring. So really focusing on the supply chains of big, let's say, car industries, retailers, big debtors like that. And I will talk about that last but not least, because we as FCI also provide solutions for that. And securitization, which is very much asset-based lending, compared to asset-based lending, what we see. Now, going deeper into this trade finance, I wanted to show you a slide, which, funny enough, I presented in one of the Raiffeisen's yearly conferences that we hold in Vienna for trade finance. Maybe some of you have also participated, which was funny. In a full room of trade finance people, I showed this slide, and they were not really happy with what came out. But of course, I want to show it more as a caricature of how to compare international factoring as a competitive tool to the classical trade finance products. And I'll try to show it from the side of the exporter and importer here, where typical LCs, letters of credit, or where the exporter is a bit still worried about the payment of so non-payment. So there is a little bit of worry there, usually very safe. But the more problematic part is that LCs tend to be very costly for the importer. So that's the bad part here in this traditional tool. Documents against payment, again, a little bit more risk for the exporter, a little bit cheaper and more comfortable for the importer. So there is a bit better. But of course, open account is where the world is going towards, where this international business is growing. And of course, this is where the exporter is very worried. Of course, will he get paid? Of course, different environments, legal environments, where the importer is very happy because he's the buyer is keen. But what we see, the two factors, so the international factor being is kind of win-win for both, where also the exporter is happy and the importer. So in a sense, what you get here is a bit of an open account with with kind of a bank guarantee. But I'll show you this in this case, just how it really works. It's probably been explained in more detail, but just to give you, if you have a Ukrainian exporter seller who sells to a Chinese buyer, you can imagine there's a totally different legal environment, payment culture. And this is not only China. I mean, look at Italy. Italy has a very different payment culture, later payments, delay in payments, which is totally normal. But for a seller there, it can be confusing. So how to help it? Of course, usually the seller in Ukraine delivers the goods, contacts a Ukrainian member of FCI, which we have a few, and of course, the FCI member in Ukraine contacts one of our partners in China, quite a few of them there. And on the basis of that, they ask the Chinese partner, the Chinese bank, to go to the financials and check these buyers in China, then guarantees for that. And that's when the seller gets also the financing right away for that. So a very important, I think, a very good tool, a very competitive tool to these LGs. But of course, it should be cheaper than that. So kind of an open account with a bank guarantee. But as you can understand, this is only one part of the factoring products bundle. And here in the next slide, I want to show you how through time factoring has developed also in the West. But here in this slide, I'm focusing on the CE. So usually the less mature markets start with domestic recourse factoring. So limited or non-recourse factoring, as it's also called. Then you go into international factoring, so a bit of cross-border invoice discounting, silent factoring, and then reverse factoring, supply chain finance. So very mature markets, the Western are already going into asset-based lending. So UK and very Anglo-Saxon, the US, Netherlands. but I have to say that CE, so Central and Eastern Europe, is right now pushing into very strongly into reverse factoring and supply chain finance. But this is only one of the ways of looking at it, because I like the next slide because it kind of gives you an understanding of the volumes where Central Europe is and what the potential of Central Europe is. And I try to put this table where I have the penetration level, so how much GDP is done through factoring. And on the other hand, I have the 2019 figures of the growth of the market. And the bubbles that you will see now, let's say this is Poland, so they have a bit, more than 10% of penetration, so 10%, a bit more is the European average, so they're already over that average, with quite high growth. Last year, almost 20%, 17%, so really nice. And the bubble is how much factoring that is in turnover volume. Turkey, very close to by a bubble also in a sense, but you see they dropped a bit last year. It could be due to the lira. Turkey tends to go up and down due to this. And the third biggest market is Russia, which is still very small penetration, not high growth, but you see the bubbles how they are. In comparison, now you will see most of the other markets how big they are. Czech Republic being the fourth biggest, and you see this is how small we are compared to these markets. But even more important, when I compare it to, let's say, Germany, see how big the German turnover is, and even more important, look about the UK. That's really high penetration. So that's how big the market is there. And I'm showing this because I think this is exactly the good news that you should hear. This is where we are going. I think CEE is growing into that direction. We try to highlight it through this next picture where you see the penetration levels. Orange are the ones that are below 7%, which we see as a high potential, and the gray ones are already bigger, more than 7%. You can see already there. Let's say Belgium is 18%. That's in 2019, of course. Spain 16%. Portugal almost 16%. So you see this is where the growth is already there. The maturity is there. But we see smaller, so the orange ones see as huge potential because they will grow. And you see Ukraine having just 1%, and that's why maybe the next slide that I show, the left side shows the market growth, which GDP growth, which is around 2% in Europe, and of course this year this will change, of course, but to see the factoring market growth being around from 5 to about 8%, which is huge. Can you imagine being a market that's so in the industry that so well overperforms the GDP growth? And what we see on the right side is what we believe in Raiffeisen is that many of these CE markets will soon, due to the changing environment, due to the more digitalization, new products, especially these Western European or banks bringing in the knowledge of factoring. We believe that in the next 5 to 10 years, all of these markets will grow close to that 11, even 12% of penetration. So if we just multiply Ukraine, which is at 1%, that means 10 times growth in the next 10 years. So there is huge potential. We think this is a huge potential for the whole industry, and also, of course, for Central and Eastern Europe, especially because the growth rates will be much higher in CE than they are in other. And I think here it's highly important exactly what we are doing today, the education of understanding the specifics. And let's say, as we have good examples from some of the markets like Poland, like Romania, the regulators and governments are here very important to add that support with the right regulation, with the right economic environment to help that grow. And you will see that will bring a lot of benefits to places like Ukraine, and we also see here Kosovo is doing a great job, and hopefully also Belarus in the coming years. But what is also helping this trend, which I mentioned, is digitalization. Just to give you an understanding of the whole market, I gave you here a bit of a picture of all these providers, is it either software providers, platform providers, or even corporational banks that are willing to share with you their platforms to bring you on board to kind of help them cover their footprints better. On the right side, you'll see these are definitely our partners in FCI. We also partner with Demicon platforms, but that's where the world is going. So many of these are helping that grow. Another element, which I said will be probably the last part of what should we mention, is of course reverse factoring. That is helping us grow even more as an industry, especially in the last years. Where reverse factoring, I hope most of you know, is a form of financing suppliers of large and solvent companies, where factors agree to purchase accounts payable only from these high quality debtors, and this is exactly why it's called reverse, because the interest is not coming from the seller, but rather from the debtor, the buyer. And here the debtor is really interested in supporting their supplier cash needs. This is really important in car industries where they have just-in-time delivery. So their crucial suppliers need to be financed well, have their resources always there. So they help those. Or on the other hand, which we see with retailers often, they tend to extend payment terms of suppliers, and this way get financed on that basis. But even more important, the word is now called, of course, supply chain finance, which I here name as win-win-win situation, which is the next level, which is the same picture here as you saw before, but it's a kind of a internet-based web platform where buyers and suppliers can log on and control the financing against payables. So this is really becoming, and I have to say, we as FCI are also involved. And these programs definitely benefit the supplier. So for the cash needs, immediate liquidity, cheaper financing, possibility to grow, better balance sheet structure due to the reduction of balance sheets total. You also have the buyer, I mentioned extending the payment term, working capital financing of financial ratios, and the bank. I have to say, here we get access to a whole new level of new customers, the debtors, of course, with their excellent ratings, And the most important thing is this is a long-term cooperation, which we also call a sticky product, which means once you onboard the client, they usually don't go away. You really keep them for a longer time. Of course, it's less self-liquidating, and what we call is mentioned is quite high fee income, and of course cross-selling potential. So these are the benefits, and of course we as FCI are also present. We've definitely been the promoters of the market. Most of our members do reverse factoring for many years now, and that's why a few years ago we also started our own product, which is called FCI Reverse, which is powered by Demica, which I mentioned, and we offer to you as clients two models, which I think are probably the cheapest version of getting into supply chain finance. So really quick to the market options. We also have then the options to consult you how to do it. We also have consultants who help. So just to give you a quick picture, because I'm quite running short on time, we have this three-corner model, which is usually made for let's say local programs, local supply chain programs. So with Anchor as so our members. So this is really typical supply chain finance solutions within local markets. And then we have the other solution, which is called the four-corner model, which is very much close to our two-factor business, but of course in the reverse side. So I believe if anybody is interested, I'm also the member of the committee in FCI. So if anybody is interested, please contact us or contact me. We'll be happy to give you more knowledge on how this works and how you could be part of these solutions that FCI also offers. So that's all from my side. My time is up, I see, and thank you for listening. And yeah, if there are any questions,
thank you, Simon. There is one question. Just let me check this one from one of the participants. I guess you mentioned during your presentation that you do some debt collection, or on behalf of the factor does the debt collection for the client. So one of the participants is just asking if the bank is the owner of the debt, why the bank is collecting the receivable on behalf of the client. I understand this is a kind of a little bit administrative or legal question, but maybe from your operational side or from your perspective, you want to give an answer to this.
Mm-hmm. Well, we don't have to be. It's not necessary that we are the owner of the debt, but what we do, this is a service that we offer. And as mentioned, we sometimes, I have to say, especially as I mentioned, after the financial crisis, we only did that service. So we kind of did a fictional transfer of ownership. And all we did is collected or did the dunning process for them, because I can share with you, we had a whole system where we didn't even do things. As long as we got the information, this got automatically sent from our automatic system. The post office already packed the whole thing, so it was minimal cost. But the power that we have is that we are a stronger member, or we have more market power to collect from, let's say, big retailers or big car industry than being a small SME client. But that means it's not necessarily that we own it, but rather we can only just support or use the service for our clients.
Thank you, Simon. It was a very good overview of the market and of the region. Thank you so much for being a guest speaker here today. Thanks for your time. Then I would like to move on the next part, which is the first panel discussion. I would like to invite our moderator and our guest speakers on this panel. Our moderator is Betül from FCI. So she is the regional director of Central Eastern Europe and the Middle East. And we have very valuable guests representing the regulator part and the association, the trade association, and also the credit bureau of Turkey. They will share very invaluable practices and experiences of them, the challenges, opportunities, and also the benefits of a legal infrastructure and the digitalization of factoring framework in a developing factoring market. Betül, the word, this floor is yours.
Thank you, Ayşen. I also welcome all of our guests today, friends, colleagues. Thank you for joining us. Now we are coming from a very developed UK market with almost no regulation and infrastructure for the regulative world, with a very developed another market with a very strong regulation and law, Turkey. From the first factoring transaction until today, there have been 30 years in Turkey in factoring sector. Today, the market is very structured, developed, and well reputed in both and in international factoring market. Today, we have 56 factoring companies in Turkey active in the market, and 20 of them are FCI members or members. And Turkish FCI members is also very, very successful in the international business. For the last 10 years in FCI's international business, Turkish factoring companies has been selected as the best export factors. So we will today listen how market is regulated, structured, what are the rules and regulations behind this successfully managed sector. And first of all, I would like to introduce my esteemed guests. I start with the ladies, Filiz. Filiz Unal, she's the Deputy Secretary General of the Association of Financial Institutions. She has almost 30 years of experience in different fields of financial institutions before joining the Turkish Factoring Association in 2010 as a Secretary General. She was our colleague. She worked in one of the biggest factoring company in Turkey, Garanti Factoring, as an Executive Vice president responsible for marketing and international departments. And she's been representing the sector to domestic and international institutions and organizations. In her present position, she takes several initiatives, such as central invoice recording system, supply chain finance platform, digitalization, and Islamic factoring. And Mr. Ercan Çaliskan, he's a senior expert for non-bank financial institutions department in Banking Regulation and Supervision Agency. Ercan Çaliskan worked in different positions in the Undersecretariat of the Ministry of Treasury and Finance until 2006. In between 2006-2008, he worked as a chief banking specialist in Banking Regulation and Supervision Agency Enforcement Department for investment banks and factoring, financial leasing, and financing companies. He served as a deputy head of department in BRSA, Enforcement Department for Investment Bank and Factoring, Financial Leasing, Financing Companies Department from 2008 to 2017. Since 2017, he has been working as a senior banking specialist in Enforcement Department of the BRSA. And our last speaker is Mr. Koray Kaya. He has 25 years of experience in the banking industry. He had a leading role in creating one of the scoring systems in the first retail loans in Turkey. He designed credit automation systems for customer loans, credit cards, and small business loan applications. He created the customer level good and bad definition used in the KKB scorecard infrastructure. He pioneered the modernization of the bank's customer loan approval infrastructure according to the current conditions, and he has been working in KKB as a Findex Business Management Deputy Secretary, Deputy General Manager since May 2012. So my first question will for Mr. Ercan Çaliskan. Ercan Bey, thank you for joining us. We know that you have a very scheduled days as we are coming to the end of the year. So thank you for giving us the opportunity to listen to you. First of all, we want to listen from you who is BRSA and your responsible areas. Which financial institutions are under your control? As a public authority, we want to learn which areas do you have regulations. We know that the non-bank financial institutions, the law regulates the bank-owned and non-bank owned financial institutions. So as an authority of supervision, how do you make differentiation in regulating and supervising bank-owned and non-bank owned financial institutions?
Thank you, Betty. Before I move to my question, I want to say hello all the participants and colleagues. My institution, Banking Regulation and Supervision Agency, BRSA, is an autonomous financial authority. It regulates and supervises the banking sector in Turkey. Mission of agency is to provide healthy functioning of credit system and secure the rights of depositors. It was established in 2000 and did pretty good job to solve the banking problems in our country. Currently, 52 banks are operating in our banking sector, healthy and sound. After the banking rehabilitation, our government decided to solve accumulated problems of non-bank sectors. The BRSA had good expertise and staff in the field of finance. Therefore, it was considered as the best choice for the job. At the end of 2005, BRSA became also responsible for the regulation and supervision of non-bank financial institutions. As of today, we have 56 factoring, 22 leasing, and 15 finance companies under our supervision. As you know, medium and small size enterprises assume a great part in our country's economic activity, but they could not get enough share from financial resources of banks due to their high credit risks. As an alternative to banking, BRSA considers asset-based financial techniques as an effective tool of financing for SMEs. This gives my institution enough reason to support these financial techniques and shapes our regulator and supervisory approach for them.
Excuse me, Ercan Bey. May I ask the other participants to mute themselves? We are hearing another voice, so we can't hear Ercan Bey here. Thank you.
I am confusing also.
Yeah, there are some other voices. Okay, we are listening
okay.
you.
In the determination of legal framework and activity principles of non-bank sectors, we take account the fact that factoring, leasing, and finance companies are non-deposit financial institutions. Therefore, they do not need tight regulations like banks. Aim of our regulatory approach for these companies to contribute healthy development of sector, to improve its capital level and corporate culture, to provide competitive environment for market participants. To achieve our objectives, firstly, we establish a new department within the BRSA. Then this department prepared a series of regulations and projects restructuring sectors. With these regulations, we determined the establishment and operation principles of non-bank companies in 2006. Then we prepared uniform accounting plan in 2007. In addition, we set up a digital data transfer system for periodic financial reporting. Finally, at the end of 2012, financial leasing, factoring, and finance companies law was put into force by Turkish National Assembly. With these regulations, we introduced new rules for non-bank companies. After that, we gave reasonable time to non-bank companies to adopt them. We called this period adaptation process. Adaptation process means relicensing process of companies according to BRSA's new rules. Adaptation process carried out over documentation and on-site examination for each non-bank company to check their compliance levels to new rules. At the end of this process, 25 factoring companies could not comply with our new regulations. Therefore, BRSA cancelled their operation licenses and they exit from sector. Today, we have 56 factoring companies under BRSA's regulation and supervision. In terms of ownership structure, 12 of them are bank-owned companies and 44 of them independent factoring companies. We apply the same rules for both types of factoring company in respect of regulation and supervision. However, as a principle, same supervisory team generally audits bank and its subsidiary for consolidated supervision purposes. Thank you.
Okay, thank you, Ercan Bey. So it is, we are hearing that you have a very good automation on reporting the whole non-bank financial institution system also. So thank you for a brief description of your role and responsibility as a regulatory body. So now I would like to ask Filiz for the second question. Filiz, could you introduce us Association of Financial Institutions? What is your association's contribution to the development of factoring sector, and what is your areas of activity, role, and responsibility in this part of the financial ecosystem in Turkey?
Thank you, Betül. It is a kind of you introduced us, and I say also hello to all my colleagues. To answer this question, actually, firstly, I would like to give brief information about the history of the factoring sector in Turkey. There are two important milestones. The first one was in 2006, and the second one in 2012. As my colleague, Mr. Çaliskan has already said, in 2006, the regulation and supervision of factoring companies were assigned to the Banking Regulation and Supervision Agency, BRSA for short. And since that year, there has been continuous progress in factoring regulation driven by the BRSA. Comparing with UK market, actually there is a strict regulation in Turkey, but we really needed it, and we did it with the BRSA together. The second milestone was a law on leasing, factoring, and financing companies passed in 2012. This had an uplifting impact in terms of the reputation of the sector, as well as yearly growth of the factoring turnover. And as a result, the 2012 law provided a boost for factoring in Turkey. Before the law, unfortunately, the Turkish factoring sector was known as a loan shark. And therefore, we believe the existence of such governmental support helps the finance sector to gain the confidence of the corporates, reach its target markets, develop itself, and become more consistent. Concerning our association of financial institutions specifically, it was established in 2013 as a semi-governmental umbrella organization for three major non-banking sectors in accordance with the 2012 law. And our association represents for the time being 22 leasing, 56 factoring, and 15 financing companies, which makes a total of 94 member companies. And before this association, there were actually separate associations for each sector. And the law was shaped by the BRSA with the consultation of these associations. Therefore, we really appreciate the BRSA very much for its support to our sectors. So as the Association of Financial Institutions, we are an umbrella organization. And the board of our association comprises 15 company executives with 5 members from each sector. And separately, each sector has also a sectoral representative board that works for the related sectoral matters and feeds back to the board. The association is also professionally managed by the Secretary General and 3 Deputy Secretary Generals representing 1 sector each. For instance, as Deputy Secretary General, I represent the factoring sector in the association. Our semi-governmental association represents these 3 major non-banking sectors as one voice in front of executive, legislative, and judicial authorities more effectively than before. We believe we are more stronger than before. Yeah, stronger together. Here, I would like to stress that if there is a success story to be talked about in Turkey, it takes its power from the cooperation with the public authorities and the stakeholders, including non-governmental organizations, banks, other players in the finance sector, corporates, media, and international organizations under one umbrella organization. And besides this, additionally, as a role model for other developing countries, we have other essential tasks, such as define and conduct ethical codes for the sectors, provide statistics, develop relationship with international organizations such as EBRD and FCI, set up the digital system, which is known as Receivables Recording Center for all assigned factored receivables to the factoring companies and banks in accordance with the related article of the law, investigate international best practices and new products, manage designing and implementation of fintech solutions. As an example, we have recently implemented a trade chain finance system which connects financiers with SMEs through a digital platform. Also, for risk management of the clients in Turkey, our members are really lucky because they have access to 2 digital solution platforms where the client risk data is registered and shared among the non-banking financial institutions and the banking system. The first one is Risk Center, and the second one is known as the Credit Bureau, which is open to banking and non-banking institutions. So I hope it was clear enough. And now I'd like to make a summary for you. Taking the non-banking finance sector to the next level, we believe is a journey. And during that journey, there are key objectives: to be one voice in front of executive, legislative, and judicial authorities, adherence to the codes of ethics, synergy with other financial sectors, cooperation with all stakeholders, centralization of the database, global know-how transfer, information sharing, digitalization, education, and last but not least, to get support of the government. Basically, the last point is the most significant one because it is influential in creating a structure for future growth. It has been not easy, but it has been really very worthwhile. Thank you, Betolu. This is the end of my first answer.
Okay, thank you, Filiz. We are following closely your successful representations of the factoring industry in the face of the regulation and also developments that you created as an association in the digital solutions of the industry. But of course, there are some other corporates that are supporting you very well. One of these corporates is the Credit Bureau. So I want to ask now Mr. Koray Bey to their activities. Koray Bey, could you please explain us your services provided by the Credit Bureau to the financial system?
Thank you, Betül. I will briefly go over what we do in the financial system in terms of risk management, of course. The Turkish Credit Bureau is called KKB, so I will refer it as KKB in short. KKB was established in 1995 by 11 founder banks in Turkey in order to collect and share risk-related information between the financial institutions. It became operational in 1999 after 4 years of preparations. Today, it has 455 employees serving to all financial sector for different purposes. We have 9 shareholder banks. It means that we are owned by the banks themselves, and 3 of them are the state banks, and the remaining 6 banks are from the public sector. These are the shareholder banks, but when you look at our member organizations, which means the data that we collect from and share to, are 177, I can say almost 180 banks or financial institutions are actually sharing data with KKB, which constitutes all the financial sector in Turkey. So there is not any single organization left outside in our system. All these financial institutions are like insurance companies, consumer finance houses, factoring companies, banks, participation banks, leasing companies, and all of them. So share their information with KKB. When we collect the information, we share it based on different rules. For example, the banking sector has their own rules to share and collect information, whereas the factoring companies have their separate rules. We not only serve to financial sector, but we also serve to the individuals also, to the trade companies, and also public authorities in different cases. Currently, we have around 80 different products and services that we provide to the market. I can classify them in 5 different categories. One is traditional data collection and sharing business, which is actually, you can say, a traditional bureau business. We collect data and share data based on rules. Second, we create value-added products and services with the data we collected. We not only collect and share the raw data, but we create different products from this data. I can say the scorecards, for example, risk-related solutions, or a benchmark reporting system, or so on. The third one is the cybersecurity, fraud prevention, and authentication services. Again, with the data we collected from different organizations, and also with the technology we put behind it, we can provide different security services to our members. We currently have 6 different fraud detection solutions we provide to the sector. The fourth group of services can be called hosting and cloud. We have a separate data center in Ankara, which we give disaster recovery solution to the banks. And also from this data center, we are currently creating a national cloud ecosystem for the financial institution, which is a very sensitive sector for data sharing, even in Turkish boundaries. And the final product family is digital transformation, which is actually digitization of all banking products and services for the consumers or to the companies within a framework of operational efficiency and centralization. So these are the basic products and services that we can say. Last year, I can say actually this year in 2020, we had 2.5 billion transactions coming from different financial organizations for different purposes for all those 80 products I mentioned. In the KKB data center, I mentioned we have the Tier 4 world standard infrastructure design, which is the one and only credit bureau in Europe, and I can say maybe in the world that has this Tier 4 standards. And we have the Turkey's first and world's 5th green data center with LEED Platinum certificate. So this data center is another actually business area for KKB, where we support all the financial institutions, business continuity issues, and the cloud infrastructure requirements. These are all the services that we provide currently to the financial sector.
Okay, thank you, Koray. As I was one of the representative of a factoring company in the previous years, I must admit how life-saving is your reporting for the credit people, because they can observe all the history of the companies and the credits, all the credits and the details of the credits of the companies, and of course the others that you already explained. So thank you. I would like to go back to Ercan Bey, that we already talked with Edward about the UK market. As he mentioned, there is no law on the UK market, which is also a very developed market. But for me, the emerging countries, the law and other applicable regulations are vital for the credit system to function efficiently and develop the financial markets and financial stability. So the law for non-bank financial institutions was approved in 2012 in Turkey. We want to listen from you. What were the gains of the law in the factoring industry in Turkey? Can you share the developments after the law in this sector?
Thank you, Betül. As you said, financial leasing, factoring, and finance companies law enacted at the end of 2012 is the most recent and very important regulation for our non-bank financial institutions. BRSA prepared the law in close cooperation with sector representatives. New law brings major changes for factoring companies. With law, first time, factoring companies are defined as a financial institution. This legal recognition contributes to reputation and credibility of factoring companies as a financial intermediary in our domestic financial market, and promote them in the eyes of the existing and potential clients. Secondly, law constitutes a legal framework for the establishment and operations of factoring companies. It regulates key areas for companies such as establishment and operation licenses, minimum capital requirement for companies, criteria for funders and executives, establishment of internal units and systems, judicial and civil money penalties, cancellation of operation licenses. With these provisions, the law provides a stronger legal framework, increases the effectiveness of sector surveillance and supervision, urge companies to operate with strong capital base and corporate culture. Thirdly, establishment of association of financial institutions is a significant gain for our factoring sector. All factoring companies should be a member of the association. The association is a professional organization in the nature of public institution. Therefore, BRSA believes that the association sets strong ethical standards for the sector, builds a bridge between companies and government bodies, and contributes sustainable growth of factoring market. In addition, with law, Receivable Recording Center was established in 2015 under the association. This system created huge database for commercial receivables and prevented double factoring finance and fraud in the market. For the next term, digitalization of factoring transactions and application of supply chain finance emerge as a challenging innovations in our domestic market. BRSA supports the association's efforts in these areas and ready to contribute the legal framework. In 2006, BRSA took over 88 factoring companies from former authority Turkish Treasury. After BRSA's regulations, financially and institutionally poor factoring companies could not comply with our rules and exit from sector. Today, we have 56 factoring companies under our supervision. In spite of decline in number of companies, our factoring sector is stronger in terms of transaction volume, capital level, and corporate culture in relation to the past. In conclusion, we believe that our sufficient and effective regulations and supervision contributes healthy development of sector and create a value for market participants. Thank you.
Thank you, Ercan Bey. Of course, the law brings many different leads many different solutions for the Association of Financial Institutions, and they developed under the association many solutions for the sector, and this leads to digitalization in the sector. So I would like to ask Filiz, what are these digitalization solutions, and which of the corporates that you are working with, which solutions that you serve to the factoring industry on a digital solutions?
Thank you, Betül. Spiros, could you please open the first slide? We believe in Turkey, the future of the factoring sector depends on digitalization. Therefore, since our establishment, we have been working very hard on development of innovative digital solutions, where we are combining trade finance products with technology. And the second slide, please. The first IT platform, Receivables Recording Center, was introduced in 2015. And in domestic transactions, single invoice discount is very common in Turkey. And it is also very common to use multiple banks and financial institutions, unfortunately. As a result, multiple assignment of the same invoice was a real problem in Turkey. In order to prevent multiple assignment and financing, there were some old operative methods. Our members had to control each original invoice physically. If it was already assigned to another financial institution or bank with an assignment level on it. Can you imagine each original invoice should be controlled, checked by factoring companies? However, of course, this physical control of each factored receivable was very difficult and risky. Therefore, the joint decision of the BRSA and our association was to create a receivables recording center, and it was added to the 2012 law as an article that gives the duty of the implementation of the receivables recording center to our association. We chose as the service provider of this new system, Credit Bureau, which is also the service provider of the risk center under the management of the Banking Association in Turkey. And Credit Bureau has an important role in risk management of the finance sector in Turkey. Briefly, the purpose of the Receivables Recording Center is to have one platform where all assigned receivables are posted by the factoring companies and the banks to prevent, again, multiple assignment of the same receivable while financing mostly SMEs. This platform works online and is integrated with the invoicing system of the Revenue Administration at the Ministry of Treasury and Finance. With this integration, the platform also verifies e-signatures of the e-invoices, which is very, very supportive and important for our sector. Since its inception, 30 million documents have been recorded into the Receivables Recording Center, and more than 950,000 double assignments have been prevented as of today. The e-invoice ratio has risen from 23% to 80% within 5 years. I believe similar platforms could be used in many markets, in many developing markets, where there is a risk of multiple usage of the same invoice for financing. And next slide, please. Our second digital solution is the trade chain finance platform, which was created last year. And the main objective of this platform is to connect financiers with SMEs through a digital platform, thereby reducing their funding costs. Suppliers, buyers, banks, factoring companies, participation banks, credit insurers, and all types of financiers should be users of this platform. The main focus of this platform is supply chain finance, but it also covers the products of all traditional factoring products, non-recourse, invoice discounting, export-import factoring, and additionally, credit insurance system and Islamic factoring. It is also integrated with the Receivables Recording Center and e-invoicing system at the Ministry of Treasury and Finance. As a conclusion, I believe such complementary systems creates a digital ecosystem which protects the finance sector against fraud and operative risks while increasing SMEs' access to finance with reasonable funding costs. That's all.
Okay. Filiz, thank you. We have been witnessed the benefits of the Receivable Recording Center in Turkey, especially to prevent double assignment, double financing, which is very, very important for the even for factoring companies and for the banks. And we are seeing that the digital solutions are increasing in all financial ecosystem, but it's also the fraud cases is also increasing because we usually cannot talk about the common database. So the creating a common database offers significant advantage for users. So I want to come to Koray that you are creating a common database and offering a common informations for the financial system. One of is the invoice registration center. So could you please give us the information about this invoice registration center and some other solutions of the credit bureau, the common database solutions for the banks and the non-bank financial institutions? You're muted, Koray.
Thank you. I'll start with the RRC then first. This system is actually owned by the Association of Factoring Institutions. We are operating the system on behalf of them. So we're not the legal owner, but we are the technical operator. Okay. When we first established the system, we sat together with the association and created all the rules, the process flows and everything. And then started the system live. I think it was in 2013 or 14, maybe Filiz may remember better. Anyway, so what we do, we first register each credit transaction, record the credit transactions in the system, and try to prevent fraud by actually avoiding the double financing of the same account receivable. We have a singularity criteria in the system. This singularity criteria is based from tax ID, invoice number, invoice date, and the invoice amount. When we link all these criteria together, we create a single receivable number, and then we make the unification based on this number. The slide on the screen shows the basic process flow during the transaction. It starts from the left top corner from the seller. The first one, seller sends this invoice assignment requirement to the financial institution, which is the factoring company. Factoring company first registers this receivable and then checks our database whether there is any other registry with the same receivable through web service. But if they don't have the potential to write a web service, technical potential, then they can also use our web screens instead. When we receive the requirement, we do the checking and we check whether this is an electronic payment, electronic invoice or not. If this is an electronic invoice, then we check the revenue administration system whether this electronic invoice is valid with the electronic signature, as Filiz mentioned. When we verify the electronic invoice, then we send the proposed request back to the financial institution with the validity, and then the financing institution turns back to the seller with the financing amount. That's the basic flow of the process. Within this process, actually, I can mention this is completely built in KKB, so no factoring company has to make any IT investment for this. This is working 100% on the cloud in KKB data center. And of course, it has all the business continuity issues considered in the process. So whether there is a problem in the data center, we can actually automatically switch to the disaster recovery center, which is very cost effective actually for the factoring companies. And all the connections are encrypted and secure between the companies and the seller and KKB. Within this system, we have 56 companies. Don't go to the next slide yet. We have 56 factoring companies and 24 banks already using the system. Not only factoring transactions are registered, but also the receivables given as collateral to the bank credits are also registered in the system. So we prevent double financing for all types of receivables. In the system, there's roughly like 5 to 5.5 million transactions per year. And as Filiz mentioned, we have currently so far prevented around 1 million transactions, double financing transactions so far. Again, in the system, there's an opportunity to send a single inquiry. Also, there's another opportunity to send bulk inquiries. So you can make a list of all your inquiries and send it in one file, which is very operationally efficient. You can search for an electronic invoice status in the system. You can search for payment instrument inquiries. Also, you can add single receivables, or you can add multiple receivables in one transaction by just uploading a data file. You can do the monitoring in receivable monitoring inquiry, and transferred receivables monitoring are also possible in the system. Now we can switch this slide, please. If you talk about the benefits of the system, first, the receivables are saved in RRC via web service integration or web screen. So it's efficient for integration. If you don't have any IT resource, you can actually start using the web service instantly. The web screens instantly. It prevents double assignment and financing, of course, works online and integrated with the systems of Revenue Administration Office. The system verifies that the invoices are arising from a real trade transaction by this within this validity process. It verifies the IDs and VAT numbers of the sellers and the buyers to prevent frauds. It collects the payment information of the factored receivables also, consolidates all data related to the assigned receivables of the Turkish factoring industry, and it has the reporting functionality for all the registered files. I can say this is the functionality in a very brief way. If there's any questions, we can try to answer.
Okay, thank you, Koray. Thank you for all the speakers for explaining how the system works and what is the requirements of the law. So we have a couple of questions from the audience. I think Ayşen will reflect the questions on the screen that we can see it.
Okay.
Before coming to the questions, so maybe I just would like to mention I just would like to ask the speakers, maybe Filiz or Koray will answer me, because it is also, the cost side is also important. So how you structured how the financial institutions benefiting from your services, Koray? Are they paying you? Are they paying the association? How it works?
The companies are not directly paying to us. They are paying to the association a membership fee to use the service. We are charging our costs to the association. I must mention that we are a non-profit organization, so all the IT investments and operational costs are covered by KKB. We only charge for these operational costs and the maintenance of the software.
Okay, so the members are paying to association as a membership fee. Is a monthly basis or yearly basis, Filiz?
It is monthly basis.
Okay.
And it is a usage fee, and it is standard for each company, for each member.
Okay. Okay, so we can come to the questions. I think we have time to answer 4 of them. I can see we have 4 questions. The first question is for the credit bureau. I think, Koray, you can answer this question for us. We're in Turkey, a situation when several credit bureaus works and completed for clients. If yes, but I will not go because it is not the situation. So I'm asking, giving the word to Koray to answer this question.
Well, the answer is no, as you said. Since the establishment of Credit Bureau in 1995, KKB is the one and only credit bureau. So we never had a problem of obtaining more than 1 credit file for a single client. The coverage of KKB is 100% in terms of the financial risks.
Okay. Our second question is for Ercan Bey. It is, what are the key licensing requirements for factoring companies according to the law? I mean, in the beginning. So looking at the market situation now, do you think these licensing requirements have to be further developed or changed? So as far as I heard that, because I couldn't remember the number of the factoring companies before the law, I think it is about 985 something.
88.
88, okay. And today we have 56 factoring companies in the market. But of course, it is not the numbers diminished by the years, but it is also for some other reasons. So, Ercan Bey, what are the key licensing requirements for the factoring companies?
I will try to briefly mention about them. A company must be established as a joint stock company. A number of founders should not be less than 5%. Paid-in capital not be less than 50 million Turkish liras. Actually, in action of the law, it was the 20 million Turkish liras. But with the appreciation of Turkish liras, we raised this amount to 50 million Turkish liras for paid-in capital for companies. Companies' article of association shall comply with the law and regulation. Founders and board members meet the conditions listed in the law. I'll talk about a little bit qualification for founders. Founders must have commercial credibility. Also must have a clean crime record. Founders should have adequate financial strength and credibility. Also must have integrity and competence required by the work. We have a two-step authorization to establish a factoring company. First step is establishment license. In the first step, we are trying to get to know the founders and if they are credible and financially strong people and there is no connection with criminal activity, our decision-making body, banking regulation and supervision board approves the first step, establishment license. Then we are giving the factoring company 6 months to pay its minimum capital requirement and form its business organization. After that, company certified as it meets the criteria in the law, and we send our assessment to our board, and if our boards approve, factoring company will enter into the sector. This is briefly how we authorize a factoring company.
Okay.
And for the at the time being, we have believe our licensing requirements is adequate for the companies. We are not considering changing them.
Okay. Okay. As far as I know, it is also clearly stated in the law.
Yeah.
Okay. Okay. So thank you. We can move to the other question. It is for Filiz. Is digital invoicing infrastructure critical to the receivable recording center? How receivable recording center is used by the revenue administration?
Yeah, yes, it is. It is really very critical because now the ratio of e-invoicing invoices in total factored assigned receivable is 80%, and therefore the infrastructure of the e-invoicing as well as this e-invoicing system at the revenue administration is very critical for the finance sector. Actually, it is beneficial for our factoring companies and the banks who are also doing factoring business, because with this system, we check the e-signatures of the e-invoices and we confirm the validity of the invoices, of the trade, actually. In the past, before the receivables recording center, there were fake invoices which were assigned to the financial sectors for financing purposes. And there were lots of fraud cases. But on the other hand, if it is used by the revenue administration, actually it hasn't been used by the revenue administration yet. Just our sector, financial sectors use it, but maybe in the future they will take some statistics from this system. We will see. Nowadays, it is not used by them.
Okay. Okay. So Filiz, maybe we must also mention that by the law, it is compulsory to use the receivable recording system. So without registrations, their invoices, the factoring companies or the banks, they are doing factoring, they have to register their invoices before they lend the money.
Yes, that's correct. And according to the law, first of all the factoring companies have to members of our association. And secondly, all the assigned, actually factored receivables should be entered to the system. And this means not only the factoring companies, but also the banks.
Okay, so it is easy for them to detect the fake invoices, double financing. Okay, let's move the other question. Who is the owner, developer of the TCF platform? So it is...
the owner is our association, the Association of Financial Institutions. We have created this platform with Betül, actually, when she was working as general manager in our factoring sector in Turkey. And we did it together with our members, because it is really very costly, and also data protection is very important. If you consider the bank subsidiaries, then maybe for them it is easier. But for the independent companies, we have 56 factoring companies, but just 15 of them are bank subsidiaries. The rest is the rest are independent companies. We established this platform for all our members as midpoint for suppliers, buyers, and financiers, companies or banks, or the banks.
Okay, so we can move to the last question. Did invoice registration system already existed, or factoring association and regulator cooperated with the revenue administration or treasury? So I think it's a joint. Anyone who wants to answer this question?
Actually, this system was established at the beginning of 2015. And within 5 years, 30 million documents was registered to the system. And this is our under our association, under the management of our association. And also the regulator of this platform is the BRSA. But also, according to the law, our association was assigned to establish it and also make sub-regulations with the cooperation with the cooperation of BRSA.
Okay. So thank you for all of you for joining us today. And Ayşen, I think we can move to the next panel.
Thank you very much. Thank you very much to all of you for being with us and for your time, really spending with us. We are a bit behind of time, but I believe everybody appreciate it and have understanding and patience with us, because really these topics, the two panel topics are really very interesting and very important for a developing market like in Ukraine. Thank you so much. Then I'm stopping sharing my screen, if I may, and we move forward to our second panel. Kamola, you are here. Would you like to have the lead? Or shall we?
Today, I really like the depth of the discussion.
I don't hear you. You are breaking up.
Can you hear me better now?
Yes.
Yes.
But maybe I should, please, I think my connection is not stable. Maybe you take a lead. I'm here.
Okay.
I will be asking additional questions.
Yes, sure. Thank you very much.
Thank you so much.
Okay, we are moving to the second panel. In the first panel, we spoke and elaborated more on the infrastructure, regulatory environment, credit bureau, and different type of how to structure the infrastructure, so to say. But in the second panel, we will talk about the real business development, how it should be, what are the ways, how can we target the segments of the clients, SMEs, MSMEs, big clients. And we will hear again from very valuable guest speakers from different markets. I would like to briefly introduce, but then I will give the word back to Betül. We have Mete Önal, CFO of TAM Factoring in Turkey. TAM Factoring is a privately owned company, but I know that a slight share of in the capital belongs also to EBRD. Then we have Dragana Stefanovic from Serbia. She is director of Telegroup Finance. Telegroup Finance is a non-bank finance institution, a factoring company in Serbia. And Serbia is, as far as I know very well, very difficult market. So she went through many challenges. So she will share us her experiences. As a third speaker, we have Lukas Kilinski. Thank you very much for accepting this invitation, Lukas. He is from Kofas, Poland, Vice President and COO. It's very important to discuss also the relationship because it is like a love and hate relationship between insurance and factoring, but it's very important to listen to him. And finally, the fourth guest speaker, Shirin. Shirin, are you here? I don't see you, but I hope you are here. Shirin El Ansari, Head of Supply Chain Finance from Egypt, QNB Al Ahli. We invited Shirin and she very kindly, very last minute notification, but she accepted to be with us here today. She will share her experience and her journey about payables finance solutions in her bank. Thank you very much. I give the word back to you, Betül.
Okay, thank you, Ayşen. So I also welcome all the speakers in our next second panel. The first question I want to ask Mete. Mete, as a TAM Factoring, you created a very different model. You differentiated as a TAM Factoring within the whole factoring industry. You are working with the SME and the MSME sector, and you have a very different solutions in the digitalizations for serving this client base. Could you just explain us how you are doing? What is your system as a TAM Factoring?
Of course. Well, first of all, thank you for giving me and giving us the opportunity to speak here and introduce our company and the model we work with. I hope eventually this will be inspiring to other companies in Ukraine, and it will give you insights as to how you can work with MSME and SME segment and create successful results. I've shared a presentation, Spiros, if you could just go to the second slide. I would basically begin with a brief history of the company. I would say that TAM Finance Factoring is founded in 2012. It's a local factoring company in its 8th year, owned in majority by Aktera, the largest private equity group in Turkey, and also owned by EBRD, partially. It's a unique investment because rather than a private equity investment, it is like a venture capital investment founded from inception by Aktera. So in that sense, it's very unique. I can basically proudly say that we're the fastest and most reliable micro SME short-term financing provider in Turkey. Our motto is, as you could see in the previous slide, we decide in 3 minutes. If everything is okay, we deliver the funds in 30 minutes, and we maintain a very, very low NPL ratio, default rate. Now, you can move on to the next slide. Here we try to explain some of the pillars of our business model. I would touch upon each of them slightly, but focus more on the more important ones. Well, A, we have strong shareholders. B, we have strong fintech capability. C, we have a very widespread sales force. We are present in 25 different cities in Turkey with 38 branches and almost 600 people, half of which are on the field with our sales operations. So this is a very unique capability when you compare us with the rest of the industry. We also have a very experienced management team, and the fintech capability I also should be emphasizing, because there is as TAM, we're the only non-bank financial institution with a certified R&D center in-house. The ability of the company to use a scorecard and a decision tree structure, this indeed is a byproduct of this R&D center and the fintech capability in-house. It's probably by far the most important pillar of our business model. Now, if you could move on to the next slide here. Just some of the stuff already been mentioned, but just briefly mentioning what sort of a segment that we're working with in Turkey. When you say SMEs and micro SMEs, what we're saying is we're working in a sea of more than 3 million legal entities. And the clear fact is that their working capital financing needs are not sufficiently met by commercial banks. And in addition to this, they're not sufficiently met by the factoring industry as well, because large players in the factoring industry, which are bank subsidiaries, do also try to stay away from the SME and MSME segment. So there is actually a clear reluctance by both banks and large factoring companies to avoid this segment. And there also is not a lot of players in the market with a high quality management team or an international best practice process and procedures. So there's a clear opportunity here. When you work with SME and micro SMEs, obviously, given the reluctance of the larger players, the price sensitivity is much less. So there's an opportunity to protect your spreads and maintain your pricing. However, there also is a much larger credit risk that you need to manage. When we look into the industry in terms of its saturation or its maturity, we can clearly say that in terms of number of customers or number of transactions, the industry is still in its growth phase. It's not saturated. There's a huge opportunity. When you look at the available pool of 3 million, the number of clients or the number of transactions where the industry is currently much small, and there's huge potential for growth here. I'm basically getting used to the terminology, but in Turkey, as mentioned before, you could be involved in non-recourse and recourse factoring, meaning you could basically move forward with a transaction where you discount the invoice and it's uncollateralized. But you can also be involved in transactions where the invoice is paid by a post-dated, future-dated check, which is the payment guarantee instrument behind. Now, as TAM Finance, we're working at the moment only in transactions where there is a check behind the deal, and that is used as a payment guarantee instrument. There's a future dated check in our transactions in addition to the invoice. If I need to dig deeper in trying to explain the clients we work with, trying to show you what sort of SMEs and micro SMEs we are targeting. If you could just move on to the next slide. This segment that we're working with is clearly unbankable. You would see here that 46% of our clients have no bank limits, no credit risk. Almost half of them have no credit risk. They are relatively a lot younger clients, meaning they don't have an established balance sheet history. They are 50% are 3 years or younger. So clearly we can say that these people cannot find the answers that they're looking for in terms of financing from neither the banking industry in Turkey nor the large bank factoring subsidiaries in Turkey. So how do we work with them? I will now move on and try to explain the important characteristics and attributes of our business model in working with this segment and still being able to come up with a very low NPL ratios consistently. So if you could just move on to the next slide. Now, well, I will begin with first, again, the fintech and analytical capability. This company, TAM, uses an in-house developed scoring and decision mechanism named Kios. This allows the company to evaluate a large number of deals very quickly, and then also allows the company to implement a risk-based pricing model to a pool which inherently has a 15 to 20% NPL ratio. And despite this high NPL ratio, by successful filtering of the Kios structure, we end up with a lower than 1% NPL ratio. This probably is the strongest pillar of our business model. Without this, the company won't be able to evaluate this many transactions in such a short period of time. I mean, I will detail some of these items also in my second question, but ballpark figures, using this structure, the company is able to assess and price almost 2,000 transactions every day. So out of these 2,000 transactions, we end up executing 400 to 500 transactions per day, which gives us the opportunity to complete any given month with 10,000 transactions on average. So this is a huge competitive advantage compared to our rest of our competitors, because it allows us to maintain a very, very granular approach to risk management. We do not need to concentrate. We can on any of our clients. We can distribute risk very evenly throughout our portfolio. Some of the figures mentioned here, you could see that our per client exposure is 68,000 TL, which is less than $8,000. Per drawer exposure is less than $6,000. These are very small figures, and when you work with SME and micro SMEs, this clearly is a rule that you need to follow, because it is very obvious that these people, the ones I tried to show you in the previous slide, they don't have assets, they don't have a lot of valuable items which you can rely on as collateral, but what they have is cash flow. So you need to follow their cash flows closely when you step in and execute a deal with them. And if something goes wrong, you need to also be the first one to do the follow-up, so that you can react quickly and recover. And if the amount that you're trying to recover is small, like the ones that we have here, like 50,000, 60,000 TL amounts, then you can obviously eventually reach to NPL ratios lower than 1%. Now this Kios structure is our first pillar. The second pillar I need to mention is our widespread sales force. Rule number 2, when you work with SMEs and micro SMEs, still in this digital world, like everyone's trying to digitalize their transactions, we are also very strong in that front. We're trying to help the industry actually improve its digital capabilities. But the reality is, when you work with SMEs and micro SMEs, you need to touch these people, and you need to be physically able to see their shops, create a physical contact, and then start to onboard them digitally if you can. And you will be digital as long as they allow you to be. So you're as digital as your clients are onboarded, which is why digital onboarding is a very hot topic at TAM Finance right now. We're trying to improve our capabilities there. But this widespread sales force of plus 300 salespeople focusing on a single product and always on the field every day, that's the second pillar of our business model. By using this company can transact with, on average, 35,000 clients every year. 70,000 clients apply to this company every year. To make 70,000 clients apply for a deal, we knock on the doors of almost 300,000 clients every year. So this is a huge, again, a competitive advantage when you compare TAM Finance business model to our peers. And without this, we won't be where we are today. Now, the third pillar is we have well-designed and established business processes tying the first two. You cannot do this SME and micro SME lending without a widespread sales force. You can also not do it without this scorecard capability, decision engine capability. But you also need to have credit processes or business processes that tie these two into each other, because otherwise one or the other will fail. The company is founded in 2012. If you could just move on to the next slide, Spiros, I'll show you a table that we're really proud of. You would see our net income development over the years. The company is almost 8 years old. As you can see, the first 4 years, while trying to develop the kiosk scoring engine, creating the sales force, teaching them how to sell, and establishing the processes, the company learned a lot of valuable lessons in the form of losses. But after that, after once those lessons were learned, from there onwards, we're making profits every year almost larger than the year before. This year, we're looking at making a profit of 43 million TL. And next year, we'll probably be budgeting somewhere around 60 million to 70 million TL. So once you learn these lessons, once the pillars are there, working with SMEs and micro SMEs become a very, very lucrative line of business. But it's not easy. So anyone who is interested in setting up the same, I think you need to prepare yourself for a couple of years where you will be facing losses. And you need to focus on these two pillars before you set your business model. So that will be my first response to the question.
Peter, you are muted.
I'm not.
Thank you, Mete. It is very interesting statistics from your side. And I think the difficult part is the first couple of years, especially for the investors to learn this business, because you spend almost, I can see that almost your equity from the beginning of the business, but then you gain all this profit and put the equity, I think, in your balance sheet. And it is also very interesting, the business model. With this small amount of business, we have many members. We know many different types of factoring operations all over the world. I think you are the only kind that have the 300 marketing people in the market, which is...
Yeah, we call ourselves the retail factoring company in Turkey. And we have
this segment is very important for the economy. I mean, socially, economically, it is very important. So thank you. Now, Ayşe, we move to...
Yeah. Okay, now we move to Serbia, from Turkey to Serbia. Another interesting market. Dragana, we have known each other for a long time, and I have been following closely the developments in the Serbian market since 2006. But you are a player in the market, so you have faced many challenges and many difficulties. Could you tell us a little bit what were the main problems and challenges you faced during all these years, and how was the establishment of the Serbian factoring market?
I first would like to thank for giving me opportunity to share with all of you experience of our market. And I would like to send you regards from Serbia, from Belgrade. When I think about question what were the main problem and challenge and how to summarize all of us challenge, I think that lack of knowledge was the main challenge when you start to do something and when you plan to, let's say, go in some new area. We start like Ashley said 50 years ago after some breaking period, and from this perspective we start like group of enthusiastic. I believe that that's the main reason why we all together with the Belgrade Chamber of Commerce where we start think and establish our association of factoring company, and together a colleague from the bank and from the non-banking sector, independent factoring company, start working together to develop that part of the business. Because if we think about the Serbian market 15, 20 years ago, it's just a bank-centric market with so many banks, with some, just few broker and dealer companies. With it's very, very nowadays young market, but in that day it's younger than now. As you can assume, when we speak about a legal framework, we start without factoring law. But in 2014, the factoring law was adopted, and it gave us opportunity to develop international factoring business. Because with that factoring law, we, let's say, skip challenging in ethics, our ethics law. As I mentioned, our market is very young market. And nowadays, our market next to the 8 of 26 bank and one government agency for supporting exporting business has 18 factoring companies, which offer different of domestic and international product to the client. But like in any story, always just we have some but. Just few banks, one that government agency, and only our Telegroup Finance Factoring, independent factoring company, is member of FCI. Luckily, on the other side, colleague from FCI, EBRD, USA, some factoring organization help us to improve our knowledge and to find best way how to share magical factoring through our market. You know, we start to develop and grow. We organize a lot of workshops, a lot of internal and external presentation. We have, like Ashley yesterday mentioned, opportunity to host FCR regional meeting last October, but COVID-19 crisis slowed down all our activities. Unfortunately, with the crisis number going down, and if we speak about Serbian market, we had around 10% decrease in domestic factoring and more than 30% in international factoring if we look at the data on first half of 2012. I would like in this moment to underline that the domestic factoring dominate in Serbian market with 97%. And it's interesting that on our market, we mostly deal with a single invoice factoring. And all this year, we try to improve knowledge, not just in our society, to improve knowledge all around the market and to find way how to move from single factoring to the portfolio model. Of course, we have another challenge with the insurance company because we don't have opportunity to insure our portfolio, and we almost speak with the insurance company to find solution for that. And I think in the future, when status of the Serbia and going up and our bonitet going up, that we find solution of that. If we speak about regulation and law, bank is under supervision of Central Bank of Serbia, and independent factoring companies under the supervision of Ministry of Finance. maybe it's interesting for all of you and colleagues from FCI and other delegates have the opportunity to see during that conference in last October that we work together very hard together with the Chambers of Commerce, Ministry of Finance, in order to find best way to improve anti-money laundering law from our perspective, because it's very tough to explain that we have contact just with the client, not with the debtor, if we talk about factoring business. And of the end, maybe is, I would like to underline that when I summarize all about, and according to my experience, the most important things is knowledge. Knowledge in the industry and knowledge through the market, because when you have enough knowledge in your colleague, between your colleague in the industry, and you don't have enough knowledge on the market, you can't speak with the financial director or some, let's say, director of some small, medium enterprises, and you can't hear and realize what's the benefit, real benefit of factoring. Because so many times we, when we start speaking with the client, first and the last question is about price, not about opportunity. And I would like to share for everyone that factoring is magic thing on the financial market. And when you speak with somebody of factoring, just try to speak about opportunity, not about price, because how to compare something, it's uncompared, because factoring give you opportunity to work more and more, to have real benefit of economy of OBIM and some other. And I really think the best way for sharing information, to sharing knowledge, is be part of FCI, because according, let's say, to my opinion, because I always want to learn something, to read something, only way to grow, to establish and to grow something is to try to find as much as you can information and knowledge, to share that best practice and to try to improving yourself and your market on that way.
Thank you so much, Dragana. I really thank to you that, because you underlined very important points like knowledge and educating the market. When I know very well that when you talk about education, you don't mean only educating the staff, educating the colleagues in the banks or in the factoring businesses. It's more important than educate the user, to make them understand that they need this product and why they need this product. There are several ways. One of the questions I see now in the chat area is about how to educate the market players. What are the ways? So I think we will come back to that at the end of the session in the Q&A. Okay, Betül, over to you for the next speaker.
I think that you are muted, Betül.
I'm sorry, I'm talking. Sorry. So, Lucas, thank you for joining us. Insurance is one of the top priority of the subjects in factoring industry. So we would like to ask you today your opinions, your experience about how you can evaluate the factoring and insurance relationship, and what is your services to the factoring industry under what conditions?
Okay, thank you very much. So first of all, greetings from Warsaw. I'm representing COFAS, but it would be the easiest way to say that I'm representing only the insurer. In my case, it's very unique. I'm representing him not only insurance company, but also factoring company. As in Poland, COFAS is having both business lines. So I remember at the beginning of our panel, it was said that it is very cruel love. From love to hate is very short way, and this is true. I think that what is really important to say is that with the insurance implementation on the particular markets, it's very similar like with factoring itself. It starts with the education, absolutely.
because we first need to say to the market that we are selling not life insurance, but trade insurance, which is very common misunderstanding in many areas. I remember when I was as well responsible for the implementation of reinsurance model in Serbia for one of the commercial insurers, Dragana, so we can speak on a site. I have also some of the experience from 2013 and 14 on that. But having said that, I believe that implementation of insurance on the market is very similar to the, let's say, feeding cycle of professional sportsmen. So it starts very simple. We are starting our training, but we can train a lot. Without a good diet, we will die. So this is very simple and very straightforward comparison with implementation of factoring and insurance on particular segment of the market. And maybe I would ask for my slides, maybe just the second one, if I may, or the third one, please, the next one. This is a very simple thing to show you about the Polish market. Today, in 2019, at the end of the year, half of the market was running under non-recourse solution with the full implementation of insurance on the market. It's 49.7. This year, it's around 50%. And how it happened, and here a short story. When I was starting my career in factoring in early 2000s, 95% of the market was in recourse solution. No insurance available on the market, and very similar to what was said by Dragana. We were really not feeling comfortable with insurers because they were not interested in placing their risk and basically to take out the risk from our side as a factoring entities. We felt that there is no appetite for risk. We felt that the risk is very costly, and we felt that we cannot transfer the cost of the insurance to our customers. What happened is that at this moment of time, factoring was used mainly for the companies where the risk of traditional loan was too high. So basically factoring was at the end of the line in terms of practical products to finance the flexibility and the liquidity of the companies. This was, from my perspective, quite normal because the return on equity this time was above 20% on the market. So basically you can imagine that it was rather profitable business with the potentially high range and large range of collaterals to be used. But in the perspective of time, we saw that there is a glass ceiling for recourse factoring. You cannot drive factoring up without practical way to outsource and outplace the risk. You need to start to work with the insurers. This is normal thing, and every market will face it at a certain stage, especially when the competition is going up and your return on equity will go down. This is quite normal subject that at a certain stage, especially with some more regulations, like regulations for banks and financial institutions, for example, in terms of capital relief programs, you will need to have practical ways to access the insurance. And I think that insurer companies, which I represent here, understand that. We understand that we are needed. We understand that we are needed for the market to move forward. What we are facing to be active player on the market is access to the information. So basically on all new markets, what we are missing is to have the access to the data, financial data, and the data which would be on the high level of quality. So basically speaking, we are always starting to work with either internal or external financial providers. This is like normal, traditional first step for every insurer. The same was in Ukraine many years ago when COFAS was having their entity there. We were collecting the data on the local level, and the path was to create a separate insurance company in the future. Of course, history did something else, and we needed to find another way to move forward. But at the end of the day, I believe that insurers will always start their business when there is the access to the information. And one of the ways to have the information is also to develop factoring, because I don't know if you are aware that for us as a insurers, not only financial data is a key point and a key value to create a scoring model. It's also the quality of the receivables. So our access to the factoring entities on the market, even if these factoring entities are promoting recourse solution, is very valuable. We are collecting the information about the payment discipline that we are putting in our system and creating payment discipline rating on the particular buyers and particular companies. In this way, aggregating the data helps to promote stepping in with the insurance model. Because if we see that the market is quite stable and the default rate is not too high, and in this way, we can promote and be more active as a local insurer. So it's a kind of building up the scoring model for the particular market and the countries throughout different sectors. And the story was the same here in Poland. We started with information as a market. Then we implemented in 90s factoring for the companies that were searching for the liquidity. Then in the beginning of 2000s, insurers steps in, and traditionally the big part of the job is to be done by the local regulator and local government. It always starts with kind of the local agency, insurer agency. In most of the cases, rather export one, because this is like traditional thing that we are seeing export insurance agencies on the local market. Then commercial insurers are stepping in, and we are starting to implement more and more non-recourse products to be able to offset the risk properly, to be able to stabilize the cost of the capital, which is coming from the banks and financial institutions, of course. And the market is starting to relax and stable in terms of the access to the product itself. Dependent on the country, of course, it takes time, different time. In Poland, it took approximately, I would say, 15 years. From the beginning of 1991 until 2000, I would say 7, the access to, so even more, like 16 years, access to the well-developed non-recourse solution supported by the insurance company was not available really. If from 2007, when the share of recourse factoring on the market was still above 90, to today, as you can see, we have the split basically 50-50, which is a good path, because it's just another 13 years to arrive arrive on such a large market as Poland, to the spread half-half basically. So I think that this is a kind of path that we need to follow. It needs to start with the knowledge, as said before by Dragana. Knowledge is a key point. I think that the knowledge is important not only for the financial institutions, it's important to spread the knowledge on the market by such seminars as ours, but maybe more general ones. The spread of the knowledge comes from the legislator, comes from the government, and it is continued by local brokers as well, because we cannot forget that the institution of broker, who is an advisor of the customers, is also quite important task. It's step by step, it grows, and also helps insurers to feel more comfortable on the local market. So basically, this is to make this story short. I think that this is a kind of the way to tell you how insurer can feel better with the risk to be taken, because it's not really the task to be just on the market, but the task is to be supportive for the factoring community and supportive for the bank community, and at the end of the day, clients, of course, and the companies. And I think that this is a clear point.
Thank you, Lucas. Thanks very much for the insightful speech and the slides. I would like to continue with Shirin. Shirin, welcome again. Very last minute notification, but you accepted to be here. You are the head of supply chain finance at QNB Al Ahli Bank in Egypt. And I had the pleasure to listen to your speech, to your presentation, I think 2 weeks ago at the other EBRD webinar, and I was quite impressed about the solution and how you developed it. Could you share with us your experience, please? Now, with Shirin, we are going to talk about not receivables finance. It is not factoring, but the other side of supply chain finance, the buyer-centric model, which is the payables finance, is also a solution for the markets. Please.
Thank you, Aysen. Thank you for the introduction. I'm really happy to be with you today. I've learned a lot from my colleagues now. As correctly said by you, it is a payables finance, but from the other side of the table, if you can say. So we were looking actually for a new business line or a new product to introduce to the market. And we had a digital payment solution. That was 3 years ago. Going to the market with a new digital payment solution, it was something very difficult at the time. The culture in Egypt is very cash-centric culture. Everybody here with the huge amount of trade, local trade, we can say that a big percentage is done on cash basis. Even if we consider the check payments, it's considered cash at the end. So we were like going into the market with something that is completely different than what they were used to do with the business, payment and collection. The product itself was very interesting for the sellers because they were interested to collect their money without having a lot of insurance over the cash with a good value date. And at the same time, they needed to encourage their buyers to buy from them, maybe even to increase the amount of commodities or material they are buying from them. That was on the seller side, which are normally very big seller companies or distributors, well known in the market. They have quite a big market share. On the other hand, the retailers, the people buying from them, it's a very small enterprise. Most of the time, they don't have enough documents to open accounts at banks. And that was an issue with compliance. They were, some of them, let's say, they were fearing to open an account, to deal with banks. They have the fear of being noticed by the tax authorities. They believe they are working normally without being seen. They are discreet. And that was the culture we started with. Actually, what we did is we tried to rely on the relationship between the seller and the buyer. We tried to build on the trust that they have with each other. We joined the sellers' representatives during their rounds, selling commodities or selling goods to retailers. And that was the relationship manager of the bank. We tried also for the documentation thing, we tried to simplify the documentation. We were in continuous contact with the regulator, Central Bank of Egypt, all the authorities in order to explain the nature of those retailers, try to minimize the amount of documents that we normally request. And it started actually to be on ground last year. We had some improvements in this area, and it was led by the regulator, and that helped a lot on helped us in the process of onboarding those retailers. We're also working with the regulator. It's not yet implemented, but it is about to be implemented, the e-KYC, rather than the normal old traditional KYC process, in order to facilitate things and to move faster. On the retailer side, we also provided an attractive package for them in order to motivate them to join the system. We made like something like what we called value proposition, which is a package inside the bank with different products at a discount rate, or some products were for free. We provided training, and that training was an issue also, because we were like 24/7 responding to their inquiries. They had their own fears of dealing with a digital solution, something mobile based, and it was difficult, but we managed with the training and with the explanation, with the gathering. We used to gather in workshops to explain something very simple, but it helped also. Some giveaways, let's say, some cash back on the account. All this helped in convincing them to at least try what we are offering them. And whenever they start dealing in this system, they found that it was beneficial for them. One thing also that we faced during our startup, let's say, stage, the retailers were not interested only in payment. They like said, what's in it for us? So we listened to their needs actually, and we provided if we can say, a simple financing package. That package with a small amount, not the normal amount that we provide to micro companies or the small and medium, with less documents, a pre-approved package with risk, so that we shorten the period of obtaining approvals. And that worked, and actually this was a very important motivation for them to join our program, and it helped a lot in convincing them to work with banks. And it is, I think it's successful up till now. We're facing some non-paid loans, but it's very small and expected, and within the planned, let's say, or the expected percentage that we are working with. If we can move to the next slide, please. Our approach. Yes, thank you. How we did it, or how we thought to do it. The start was with a dedicated team. We were based at the head office. The team was divided into two smaller teams, one commercial team and the other was a technical team, which we call support team. And these were the ones providing training, answering all questions, and they are the ones dealing with the platform and the application itself. However, by time, we found out that we need more people at the branches or the network level for proximity to retailers, because we're addressing retailers all over Egypt. And we are, as QNB, we are diversified. We have a big network in the country. We're more than 200 branches up till now. So we decided to leverage on the workforce that we have also on the network level. What we were doing, or the business model or the framework, we were targeting the sellers, the big sellers. They can be either manufacturers or they can be distributors. Some big manufacturers, they distribute their own products, so we deal directly with them, or they use distribution companies to handle this for them. So we go directly to those big sellers. We explain, we present, and actually they really like the idea. It's for them better for the cash flow, security. I think it can increase also their sales, because some small retailers, they have the tendency and they have the means to grow. However, they need funding. So they helped us with providing their list of clients, the small retailers they are buying from, they are selling to, I'm sorry, and we contact those clients. Actually, in the beginning also, within our experience, it was not very successful to go directly to the retailer. So we asked the seller to give them a glimpse of the program, to ask them to listen to us, because they trust each other. They have a very long relationship commercially. So they helped. Sometimes we design a workshop to gather 20, 30 retailers so that we can access them more easier with a bigger number. We requested from the seller not a guarantee, but at least in order to feel confident with those small retailers, just to give us like a track record of the dealings. They gave us a letter telling us some very basic information, like such and such ex-retailer, he's buying for the past 2-3 years with an amount annual or monthly equals to X amount, and they are committed, they pay in time. We started replacing supplier facility, or if they pay on cash, we offered finance, and that was for them a motivation to work with the bank. We were supported here very much with the trend, or let's say the direction in the country. The government is really encouraging getting rid of cash as much as possible. The central bank is doing so, is supporting. Central bank also is supporting SMEs heavily since like 5 years. They started this support. They provide finance at a very special rate. So we decided to make use of this in order to go with the direction. Also, QNB Al-Ahli, we started focusing on SMEs maybe before other banks did in Egypt, and we are really doing very well in this area. However, the class that we are seeking now, or we are targeting for the B2B, is not the SMEs. Actually, it's very much smaller than that. We decided to do that, and we studied it, and we were happy to onboard a new segment to the bank, where we can call it microfinance. However, it is within the B2B business line that was created under the supply chain finance. It's considered for the bank as a new vehicle or engine for new clients on all levels. We can attract big ones as a seller, and we attract smaller ones as buyers, and we provide all the banking products that we can provide. We designed a special lending program, as I said, pre-approved, fast, easy, with small amounts. Our competition here, banks, I can say that we were the first bank to introduce such a product into the Egyptian market. However, there are now 2-3 banks, they are offering the same product. We feel that we're leading the market. We had our already, let's say, stamp on the product. We're improving every day. We're not afraid of the competition. It's very normal. It makes us maybe do better, let's say. However, the real threat is from the microfinance lenders. And I will remind you of TEM Finance now. They are very convenient for the very small companies. They are not regulated by central banks like we are under the banking sector. So they require less documents. This is a challenge. However, in Egypt, they are limited to an amount. There is a ceiling to the amount they can lend those very small companies. In addition, they are expensive. That's why we normally come in this area. We are, because we are funding ourselves, we are much cheaper. We also have our own risk profile, so we can provide a cheaper fund for those companies. The risks involve mainly credit risk, non-payment, and this is a typical risk that we are all facing. We try to minimize the risk as much as possible. However, it is there. Maybe with small retailers, and as well said before, small amounts, big numbers, it minimizes this risk. The bigger risk for us is the operational risk, in my opinion, perfecting the documentation, the very little documentation that we have, the legal documents, these sort of things. I believe it is of quite an adequate risk for us. We try, and we're happy that up till now it is controllable. In order to move with the progress and the developments that is happening in the market, and to minimize the risks, to minimize the time, to attract more clients. If we can please move to the next slide. We are now in the process of implementing our own supply chain finance platform. We acquired a good platform with one of the reputable providers. However, we believe that it's still in the testing phase. However, we believe that it needs some preparation, and if I can use the term learning here, it will need some time from our market, our clients, our proposed solutions. For the target we are, the targeted segment we are targeting, it will need some time for them to upload invoices using the internet. However, because we have several options in this system, we can ask the big company to upload the invoice instead of the small retailers. It's an option. It's also, I think it will improve the process for us. It will be integrated with the core system of the bank. We will upload credit lines to those who will be provided finance. For those who will not be provided, it will be a typical transaction from their credit balances or current accounts. This we expect to be implemented maybe Q2 2021. Hopefully, we will be ready by that time. It will take time again. It will need some effort in order to introduce to the market, but normal and typical process that we have been through for all the past 3 years. And to end up my experience, let's say, or our experience here in Egypt, I would say that in order to be more effective, we need to listen to the market. And our market told us to move with a different approach, which is small buyers, mass companies buying from a bigger seller. We have also learned that better to diversify our portfolio. So we are now talking to many sectors, mainly FMCGs, but we are also talking to industrial sectors. We are talking to building materials sector. We're talking to pharmaceutical sectors, and we have a very good portfolio in all those sectors, and this is a good approach. We're always thinking of it's a journey rather than a product. We're implementing each day a new idea. We're reviewing each day what was wrong with us or what needs improvement. And this is also, it's not a stagnant product that we are providing the market. It's very dynamic, and we have always to respond to the market. And I think this is one of the success keys today in this business, especially. We also are happy to be the first Egyptian bank providing this solution. Although we are not the only now, but we keep the lead, and we're trying to always to keep the distance between us and our competitors.
Thank you, Shirin. Thank you very much. It is really valuable. You shared your experience as a first runner, as a pioneer in the Egyptian market. We know that Egyptian market is heavily and strongly developing also the factoring product recently. A lot of new licenses have been accepted and approved by the authority. Thank you very much. But I realized that you also covered the second question in your speech. Now we are running out of time, unfortunately, and we have also Edward now. He's waiting for his part for Q&A. I would like request the three speakers to give a few words, a few sentences only for the second question. Mete Bey, can we start with you, please?
Yes, of course. I mean, I've also tried to briefly mention this in my first response. Digital solutions provide a huge role in our credit assessment process. The system we use, Kiosk, which is a structure of multi-scorecards and decision trees. That's instrumental, pivotal in our business model success. This system analyzes applications within 3 minutes. Almost 80% of our applications are finished without no human touch. Only 20% of applications fall onto the desks of our credit evaluation department. And in addition to the evaluation, the system, the structure, using sub scorecards and decision trees, tries to predict the probability of default with a 90% accuracy, and therefore reflects a cost of risk pricing as it evaluates a yes or no to the application. So that's also very, very valuable for the quick paced environment of factoring industry. So therefore, I would say on the evaluation side, it's absolutely critical. And on the selling side as well, if you have digital products or digital developments, some of which the regulators, guests to this panel gladly mentioned, a lot of organizations collectively are working to digitalize the factoring industry in Turkey. This is very, very valuable. Eventually, if certain amendments are made to the current legislation, I think we will get to a point where from start to finish, transactions can be digitally made. As Tam Finance, we think we have currently the capability to do this, but it's only with 20% of our daily transactions. The larger percentage it gets to, the more productive the company will be and the happier the clients will be. So I would say digital solutions from here onwards, both on the selling side, at the point of sale and also at the point of credit assessment, absolutely very critical.
Mete Bey, I think I remember that I saw a question in the chat area I need to share with you. One of the participants asked whether you take the post-dated checks as the guarantee of your funding or as an instrument for payment. So why do you take this post-dated checks? Maybe the post-dated checks concept is not very well known or not very familiar to the Ukrainian market.
Yes, well, yes, absolutely. I would have guessed that. It's not a guarantee. It is used as a payment instrument, just like the central bank, I would say. Legal entities who have the capacity to issue checks are in fact printing their own money using these future dated checks. So in world of commerce in Turkey, it's very common for people who are parties to a deal to make the payment issuing a post-dated check. So if I am to issue an invoice to a party that I provided services or goods to, in return, my client can provide me with a check saying that I will make this payment to you in X days. The checks are usually short-term dated, meaning anywhere between 60 to 270 days, but they're commonly used. There is no guarantee behind this. So in case my client at the end of the day is not able to come up with the funds to honor the payment of that check, the system is down. The trick that we use in our credit assessment is we mentioned that as Tam Finance we are focusing on MSMEs and the unbankable MSMEs who do not have a lot. These people are not welcome, not credible, so they're not able to find solutions. But the parties that they work with who issue the checks, those parties are relatively more credible. 1/3 of our portfolio, the drawers of the checks are corporate, another 1/3 from the commercial segment. So the trick that Tam uses today is by assessing the drawer's credibility today, which is a relatively more credible party, you provide financing to a less credible MSME for a 110 to 120 day period. So you focus on the short term, you assess the more credible party to the transaction as the drawer of the check, and then you finance your MSME client who's less credible and less reliable. If the drawer is not able to pay, then you need to go after your client. Well, obviously you could go after both. It's a double recourse structure, but the second trick there is if you keep the transaction amount low, it is possible for you to claim this from your client as well. That's the reason why we maintain a very granular portfolio. Average transaction size for Tom Finance is 35,000 TL, which is less than 5,000 US dollars. So if you're working with MSMEs and SMEs, but MSMEs more commonly, then you need to make sure that the exposures are not large, because if the check is not honored after 110, 120 days, it's the client that you need to follow.
Thank you very much. Dragana, could you please summarize your thoughts very shortly in a few sentences, please?
You know, when you have mission and when you want to, let's say, share your knowledge with other, you live with that with that challenge day by day. And I remember that we, together with the Chamber of Commerce, because the Chamber of Commerce have a lot of local points, let's say, organized something like Financial Bazaar 5 or 6 years ago. And on that bazaar, we have opportunity to, let's say, speak in front of a lot of SME clients and share our knowledge of factoring and find a new client. You know, and that's, I think, the main and the best way how to work all together. Of course, with your support, with support of colleagues from insurance industry, from the banking sector, and just be very, very tough and strict in that direction to go and to learn and share that knowledge.
Thank you very much, Dragana. And I would like to continue with Lucas. Yes, what are the services you offer to the factoring market?
So basically speaking, I think that here it's quite easy to say. So first of all, it's traditional trade credit insurance for the receivables. So the receivables which are purchased by the factoring company can be protected by the insurer. It's a traditional offer, like on almost every market in the old Europe, but also as insurers, we are providing the offer of reinsurance on the local market. So basically, when market starts at the beginning of the particular markets, it's always a matter of finding a certain balance between the investment done by the local government and having external provider of reinsurance to combine these two sources and be able to protect companies from the insolvency on the market. So basically these are two. The third one is already mentioned by me before. Of course, the kind of special offers that are in line with the capital relief regulations. So these are special policies for the factoring providers. So these three, basically, these are the three ones.
Thank you very much, Lucas. And I noticed that you already replied some of the questions from the participants in the chat area. Thank you very much for this. Thank you. Thanks very much again for attending and joining us today. Thanks to the panel. And I will closing this session and give the word back to Edward for his Q&A. Edward, over to you.
Thank you. Right. Can you hear me? Yes. Okay. What I'd like to do is just follow up on there are three questions in the chat room, which I think have not been answered, although one has. Question, is a post-dated check a bank guarantee? And indeed, we have just discussed that. It is not a guarantee by a bank. But the important thing that we would treat in the UK is that proceedings and collection can be made against a post-dated check that is dishonored totally separately. We treat it as a dishonored bill of exchange, and the bills of exchange laws apply, of which the most important is that any dispute about the underlying transaction giving rise to the receivable cannot be brought up. The only issues to be brought up are those of procedure. Has the proper notice of dishonor been given? Has it been correctly filled out, etc.? So a post-dated check is valuable because you avoid any discussion about the underlying receivable. The second chat room question I would like to deal with, is there any information about defaults? And I assume that you're asking about default by debtors who do not pay their debt or become insolvent, or secondly, defaults by clients who go out of business and cannot honor their undertakings that the debts will be paid. Our problem in the UK, and I suspect in the rest of Europe, is that if you give such information by reference to a specific factoring company, then that is a breach of competition law because it is market sensitive information that can affect competition. So the only way you can find out is on effectively a global basis. So we do know each quarter how many of the debts that have been purchased on a non-recourse basis have proved to be dishonored. So as a percentage of the total turnover, the information on defaults is available, but it's only available through cooperation of the industry. It wouldn't be available otherwise. The third question in the chat room I'd like to answer, what is the best way to deliver knowledge of factoring? And the words we use, to the market. So I assume from that, the questioner is talking about how do you spread the good news about factoring to potential clients? We find, believe it or not, that the most successful way is through the accountants whose responsibility it is to audit and prepare the accounts of SMEs, because at least once a year they see their SME clients and they can point out to them that they've got cash flow problems, that they might be going insolvent. And that is the time that they can suggest, why have you never considered factoring? Because the biggest asset on your balance sheet are your unpaid receivables. The second area is the insolvency practitioners, what we call the reconstruction experts. And it's the usual thing, there's a cash flow problem and they can suggest. The third area, and this is where it's very important that your factoring association is a success, believe it or not, is the government. The government have it as one of their policies to support and encourage SMEs. And they will regularly offer roadshows to point out to them how they can enhance their position and get working capital. So as an association, you can promote to these various sources, accountants, insolvency practitioners, government. The government here would be our Department of Trade and Industry. As for how do you deliver knowledge, not to the market, but to members, then that is education through the trade association, common education policies. And I mean, a quick look at our website. Well, you've got day classes, you've got online training, you've got residential classes, or almost any topic you want. Security, client management, money lending, data protection, fraud. That is the best and most effective way. Now can I go to the specific questions that have been addressed to me? Well, I'll answer this one. Do you have in the UK credit bureaus for companies, SME and others, and can factoring companies use it? Yes, there are very successful credit bureaus that will keep information both on private individuals, but more importantly, on companies. And almost all factoring companies will use them, and they pay a fee for the service. I mean, when we started factoring, and such organizations didn't really exist in the form they do now, then you had to learn the credit of the debtors the hard way. Okay, now there were two very interesting questions to which I can give you an answer, but it may not be the one you want. The first question is, why is debt collection, quotes, for the client if the bank is the owner of the receivable? So does it collect the debt for itself or for the client? Well, we know that when you're selling the service, you suggest to the prospective client that, of course, you will be responsible for his debt collection. Well, in law, if you have purchased the debt, that is not actually true. And it's rather important because you are charging on your administration service fee for collections, you will be charging value-added tax at a rate of whatever it is. In our case, it's 20%. And we need that value-added tax to set off against our inputs. But it's strictly, in my view, in the legal sense, it is not a service to the client. It's a service to your, it is protecting your own asset. But fortunately, the VAT authorities have accepted that the client is the beneficiary and will accept that VAT should be charged on it. But it's a fine line. Another question, sorry, I just have to. Oh yes, okay. There's another question very much on the same line. What does ledgering mean in practice? Because that's the question, because you will find in international conventions that a factor, it's one of the services that a factor can give if it wants to call itself a factor. What exactly does the factor do as a service for the client? Well, again, it's a little bit like the answer to the last one. You tell the client that you're actually keeping his sales ledger for him and you're relieving him of that obligation. The reality in law is that you're actually keeping an account of the debtors for yourselves, so you know what assets you have purchased. So the so-called sales ledger, which has the face value of all the debts at 100%, in reality is actually a ledger showing the purchase price of the debts. So it's the same as the other. The legal answer is not the same as your salesman's answer. And then there is, going along the same lines, the question, does the assessment of the debtors fall within ledgering? So the answer to that is very much no. The assessment of the debtors is done by you for two reasons. One, so that you can decide how much you will pay for the debt, because at the end of the day, the availability of funding to the clients is related to the value of those debts that you have approved. So if you don't approve a debtor, then the receivable is unapproved and you won't be making any advanced payment against it. So you are credit assessing, although I hesitate to use the word credit, you are assessing the debtors for your own protection, so that you know how much you will be prepared to pay for that debt by way of an advance, and so the client knows how much his availability of funding is. And then the second reason that you would want to assess the debtor is if you are offering a non-recourse service, you are taking the risk that at 90 days past due, the debtor will not have paid the debt. And then you will have to pay out the approved amount. So that's the second reason you would want to assess. But can I emphasize, you are not offering a credit bureau service when you are assessing the debtor. Why not? Because under our Financial Services Act, the operation of a credit bureau is a regulated activity, and with it comes all sorts of responsibilities. We are not operating a credit bureau. We are assessing the debtors for our own protection. Another question. I'm sorry, I don't know. Oh yes, well this one relates to regulation. From the point of view of the regulator, why would you need to regulate or supervise the factor as an entity rather than the factoring as a product? So is regulation directed at the product, or is it directed at the operators, at the factor? That's a matter of really what you want to do. But if you are going to regulate the product, then I'm not sure how you can police the market unless you know who is actually selling that product so that you can police it. So, so in my view, it is the factor that should be regulated to keep within the rules. I'm very unhappy at the concept that the product itself should be subject to regulation. I'm a great believer in the free market, and the free market will develop the product faster than any regulator can adjust his rules. But I mean, the second part of that question, having said, if a factor as a non-bank financial institution working on its own capital, what is the aim of regulation? Well, I hope in my talk, I have said that is the first question you need to answer. What is the ill that you are trying to protect through regulation? What are the benefits of regulation? I can't answer that. You're in the marketplace. I can only look at the rules. But it is very important. What is the aim of the regulation? What do you want the regulations to do? You must answer that and be very clear. That is almost number one on your agenda? Why do we want regulation? What is the benefit to us of it? And finally, a final question to me, which is, mediation is a resolution of the conflict that should become more frequent in the Ukraine. I hope so. Factoring business may set the path. The question is, mediation is done behind closed doors. Yes, agreed. But is it possible to study cases for building expertise in this area? The answer is, that's the whole point. Mediation is definitely confidential. Now, you can go online, and if you type in case studies for mediation, you will find quite a few examples, and even how day to day the mediation goes through. The only thing I can suggest is, if you're going to start mediation, then you should take training courses, because more and more mediation now is done online. You don't need to go to a center. Mediation training courses can take about 3 to 4 days, and you can do the whole thing at a distance. And obviously these are the answers you will receive. So one, training courses. Secondly, if you are members of Factors Chain International, of FCI, then you will have access to the members handbook. And in the members handbook are all the arbitration. I emphasize arbitration because we haven't mediated yet. Have all the arbitration decisions, and you can see what the issues are. But remember, those are disputes between two factoring companies on a cross-border transaction. Other than that, I suppose the answer I could say is that now that most mediation is going to be done at a distance online, it might be useful to become members of one of the international arbitration and mediation groups. And as I say, I consider CEDA in London has a first-class body of expertise and mediators. You needn't actually leave the Ukraine. You could do it all online. I hope that answers all your questions. If there are any others, my email address is on my presentation, or easier is to send them through to Ercan, who will pass them on to the legal committee and fund it. I believe we have a meeting very shortly. Be happy to answer them. I hope what I have said to you is useful. I hope, more importantly, that it is thought-producing, and I hope you will all benefit, and I wish you all every success in the development of factoring in the Ukraine. And so thank you very much indeed for your attention at this late hour. Thank you.
Thank you, Edward. Thanks to all speakers and thanks to all participants who stayed until this very moment. It was a very long conference, but I hope the topics were interesting for you and you have benefits out of it from the bad and good experiences of the other practitioners and experts in the industry. I would like to give the word back to Kamola and Vladislav for a few words in the closing session.
Thank you very much. Thank you very much, dear colleagues. It was a very, very
delicious discussion. I am sure we will use the recording of the conference many times still. And I really would like to thank you, each of you individually, for gifting us with your time, with your professionalism, and sharing your talent for us to help to build this product to benefit the small and medium, but also larger corporate companies in Ukraine, and in general, building next year a roadmap to implement this product. I will give the floor to Vladislav, but I very much hope to see all of you in Ukraine next time when we meet. This is our last event for 2020, last public event for this year. I'm very happy that we still, despite of everything, we managed to fulfill our plans, and Ukrainians have black belt in hospitality. So I want you to feel that when you come to Kyiv next time. Thank you very much.
Thank you, everybody. Thank you, Kamola. I really want to say a very, very big thank you to all lecturers, to all guests, experts of today's event on behalf of Ukrainian trade finance and factoring community. I was receiving on my private mobile all the time some comments, the excellent presentation, the brilliant idea, the good solution, and the dreamland about the IT infrastructure that is already built. I mean that it is now a kind of challenge for us to reach this dreamland in Ukraine. So you have inspired us a lot how to design, how to see the logic of this process, how to join forces and do it together. So really thank you a lot for this day of knowledge sharing, and we will keep in touch with you over the emails. We are going to actually make, as you have advised us, sharing with information with the market on a regular basis, and set up a kind of factoring event every season, so that the market would know that as the new season comes, the factoring goes on. So you will probably see our invitations for the next events already in winter 2021. Thanks a lot. Have a great day ahead. Have all success in factoring business, and what can I add? It is strange, but I will use today I will take the Kamola's role to invite everybody to switch on the cameras and to make a picture of all the gathering we have today. So it's really a nice tradition of all events by EBRD and FCI to make those pictures and to share our smiles, have it as a reference that our business is going on. So whoever is online now with possibility to switch on the camera, please do this. We will make some pictures for our, again, publicity and information sharing with colleagues. Me too, I will join the ranks of photographers of this event, and do
as long as we look slim, I don't mind taking photograph.
Colleagues, please, if you have the opportunity, switch on the camera. It is much better to see the faces instead of names, although names also very, very helpful.
Irina, good to see you. So many good faces.
And yes, I will do something to make a picture less without my silhouette on it. Excuse me.
Shireen, thank you. Well, we're taking picture. I just want to say thank you for accepting our invitation, especially at such short notice.
Thank you so much for inviting me. It was a pleasure.
Really enjoyed your intervention.
Thank you, Shireen. It was very helpful presentation, and thank you for those of you staying with us until the end. Thank you, Çağatay Bey. You're here from KKB also. I saw you.
Thank you for everyone.
Vladislav, so picture is ready. We all look slim.
Yes, thank you. Yes, you are great. Thank you so much.
Oksana, Svetlana. Hello, everyone.
And yes,
so
you
good
see
to
the rate of interest. It's the 5th hour of conference, and we have still above 50% presence of the audience. So it's an unbelievable. On the online conference, we rarely have this kind of discipline.
Indeed, indeed. Indeed, I really admire friendship and collaboration on the Ukrainian market. You are all very innovative bunch of people, and I'm really honored to have talent from Egypt, from Turkey, Serbia, from Poland, you know, from so many countries. We had UK, Amsterdam, Netherlands, so Greece. It's amazing. Thank you so much.
And Vladislav, thank you for your kind words about Turkish factoring market on my private message. Thank you. I am always here to support you.
Thank you so much. And Betul, Aisha, thank you.
I understand that it's the world of factoring.
You are
Factoring
muted,
is really
Kamola.
world of friends.
You are mute.
Oh, sorry, I was just saying,
Okay.
Betul and Aisha, thank you so much for excellent collaboration and panel discussion. Thank you so much.
Thank you. Thank you, everybody. See you next time.
Everybody. See you in the next.
Thank
See you in
you.
Kiev, we hope.
See you in Kiev. Yes.
Yes, everybody. Thank you.
Thank you.
Thank you. Владислав, спасибо огромное. Дуже дякую.
Дякую вам.
Вам
Побачення.
Мариночка, привет всем, Оксана. Ой, все такие родные, все.